the faculties for the day, Shri Gautam Bhai Shah and Aditya Surte. I am very much happy to be here at this session today. We are to learn about the trust, everything about the trust, the charitable trust, when it is made as a person under the GST law. So we have today expert faculty to deal with this topic, and I am very much happy to see Gautam Bhai here at our platform. He is an expert on this subject, and I am fortunate that I am his colleague at NM College. We were in BCom together in 1981. We cleared. So I am happy that my friend is now teaching us something very interesting and very useful to us. So I'm thankful to Gautam Bhai for accepting our invitation in just one phone call by our conveners. So this shows the eagerness of even the faculties to teach us. Secondly, about Aditya, Aditya Surte and Aditya Seema Pradeep. I am very much happy that both of them also agreed so immediately that yes, they will be sharing to us about GST qua the trust. So having first understood the real terminology about the coverage of the trust, how it is to be handled, how it is looked at under the income tax law, and what are the present certain issues under the trust. Then thereafter, from this Aditya's, we will be learning about the GST impact on the trust. So it's a very interesting session. And as told by our president in the beginning of his this tenure, that we will be having very such important and interesting topics to deal with. So dear participants, always look to our programs and tell your friends also and participate in large numbers. With this, I am thankful to all the faculties for the day, and I hand over to Jatin Bhai to take this forward. Thank you.
Thank you, Deepak Bhai, for your kind words. Now it's my duty and honor to introduce our today's first speaker, Dr. C.A. Gautam Shah. Welcome, sir. C.A. Dr. Gautam Shah is a practicing chartered accountant. Besides being a chartered accountant, he also holds a PhD in a business finance, where the topic of his thesis was the management of a charitable institution, a financial perspective. He has completed graduation in the commerce stream from the Narsimhanji College, as said by our chairman Deepak Thakkarji. Commerce. He is also currently the managing partner of the Gautam Shah and Associates. His firm provides all the traditional services of a chartered accountant, such as direct, indirect tax, FEMA, advisory, statutory, etc. He is specialized in the issue related to charitable NGOs, estate, planning, private trust, family settlement, wills, and other allied field. He is a guest professor at SP Jain Management Institute. He is a core member of BCA's Corporate Affairs and Allied Law Committee. He also conducts a charity clinic at BCA's. He has delivered talks on the charitable institution on various forums, including BCA and the ICI. He has been awarded Outstanding Research Contribution Award, ORCA, by the University of Mumbai. He has been acknowledged for his contribution at an international conference on commerce and management. His motto is to help the people with the knowledge that he has gained. And he believes that the knowledge gained is of no use unless it is shared with others who did not get the same opportunity that he did. He is passionate, including interacting with the people and making a new friend. He is also a word sportsman and the play table tennis, cricket, badminton, and the carom. With this brief introduction, I welcome Dr. C.A. Gautam Shah with a round of applause.
Thank you, Jatin Bhai, for the kind words.
And I request Gautam Bhai, all the stage is yours, and we can have this thing, your talk on this topic.
Thank you very much. Good afternoon to all my professional colleagues. Indeed, it is my pleasure to deliver a webinar for a prestigious Goods and Service Tax Practitioners Association of Maharashtra, formerly known as the Sales Tax Practitioners Association of Maharashtra. It is a state level body of sales tax practitioners established in 1951, and it's a charitable society. So it's really, in my interest that you are a charitable society, and I practice in that. Its main object is to educate the public in general and the members in particular indirect tax operative in the state of Maharashtra and whole of India. My topic for today has been given is charitable trust, understanding role and income tax impact. Before I start my presentation, I would like to sincerely convey my gratitude to CA Alok Mehta, the President, and his team. CA Deepak Bhai Thakkar, Chairman, CA Umang Talati, CA Jatin Chheda, and Advocate Sejal Shah, the joint conveners, for giving me this opportunity to deliberate and disseminate on the subject which is very close to my heart. I believe that sharing knowledge enlightens the universe. Also, I would like to convey my thanks to CA Premal Gandhi for suggesting my name for this webinar. Charitable institutions are sailing in the rhythm of Kabhi Khushi Kabhi Gum. Last few years, the laws applicable to the charitable institutions have undergone a lot of changes, which has led to confusion in the mind of stakeholders. The biggest example is GST applicable to charitable institution? So let me take you on the journey of charity laws. As our Father of Nations stated, you must be the change you wish to see in the world. So let me change the mindset of the participants and offer you the opportunities and challenges that are there in charitable trust practice. I'll be speaking till 4:15 p.m. and thereafter I'll be taking questions for another 15 minutes. I will request all the participants to put their question in the chat box, and I will request Umang to compile the same for my response.
Yes, sir.
Thank you, Umang. In the start, Alokji remarked that, I look like a Supreme Court judge. But let me assure you, all the participants who are there, as well as the committee members and the conveners and the deputy conveners, that I'll be giving my whatever knowledge that I have, I'll be sharing whatever that I have with me, and it will be a really thought-provoking lecture from my side. I not withheld anything till the last moment by giving a judgment as the Supreme Court judge gives. And as Deepak Bhai said that we are a fellow Anamites and we are dynamites. So now let me take you to let me start with my presentation. First of all, let us understand what is the role of the stakeholders in the charitable trust and who are the stakeholders. The stakeholders are settlers, trustees, managing committee members, directors, public at large, professionals, and government. So these are the 5 stakeholders who are there. And there are different charitable institutions, there are different formations which are there. Most prominent are a charitable trust, a charitable society, and a Section 8 company. Now, what are their roles? That roles are very important. Any institution or any charitable trust or any charitable society or any Section 8 company starts with a person who is called a settler or a promoter or an author. They are the pioneer, they are the backbone who starts any organization based on which a charitable institution is been created. Now a settler or a promoter or author who has a vision or a dream to create a charitable institution, the dream and the vision has to be such that the activity that they want to create should be a public charitable activity and not any other activity other than public charitable activity. So the intention of creating a public trust should be that there should be a public charitable objects, public charitable purpose, or public charitable activity. The intention should not be to do a business in the guise of a charitable institution, because otherwise, not today, but tomorrow, there could be a major issue, and it could be a lot of unnecessary consequences the trustees or the stakeholder has to face. The trustees are the people who actually administer and manage the trust. They are the backbone, because once the trust is settled by a settler, or a charitable society is been promoted by the promoter, or a Section 8 company is been promoted by the directors or a promoter, it is thereafter this trustees or managing committee members or directors who administer and manage the trust. Their role is really very, very important, and they have to be really the backbone of the trust. Many a time we have seen in our practice that the charitable institutions which are created by the trust, the trustees are only for the namesake. Few years back, whenever anybody used to come to our office, they used to give a card, and at the back of the card, they are the trustees in almost 10 to 12 trusts, and they were boasting about it. But because of the change in law, which has been, recently, a lot of amendments which have come, now when I ask for the card from the same trustee, there are no printed trust at the back of it, because now they are not a trustee. They don't show that they are a trustee, because the liability is unlimited. And the liability is jointly and severally. So here we need to be very worried about it, that wherever you are a trustee or a managing committee member or a director, you need to be worried about it, that whenever you do anything, your liability is really unlimited. Thereafter, we go to the public. Many of the charitable trusts which are created, when they come to our office for the creation, many a time we take a lot of time to create it. At least we take 3 to 4 personal hearings or a Zoom meeting right now to understand why that person wants to create a charitable institution. Sometimes it becomes a nuisance. They feel that, why this gentleman is asking again and again, why he does not understand that I have to create only a charitable trust. But we try to analyze, we try to understand the intention behind creating a charitable trust. In the first meeting, it becomes very, very, important. They tell us that they have certain things in their mind. That is why a charitable institution has been created. But afterwards, in a second or third meeting, the actual intention of the settler, or along with them, the trustees who are going to be there, their intention is, been disclosed to us. And many a times, it is something, it is something where we are very shocked. Like, we come to know that this charitable trust they want to create is only for doing a business and nothing else. Like, it is a tool for a tax planning. And mind you, my friends, charitable institutions are not a tool for tax planning. Charitable institutions are for doing a charitable activity only. So here we understand what exactly it is. So it should be benefit. The beneficiaries should be people at large. And this benefit should actually flow to the people. That could be a general people, or that could be a mass of people, that is allowed. And technically, if it has been a real public charitable institution, it should be without any reservation for any caste, creed, color, language, region, or religion. It should be above everything. It should be applicable to everyone. It should not be limited to a certain caste, or it should not be limited to certain language or certain region. Gone are the days when these trusts which were created, the registrations were granted. Now it is impossible for us to get an exemption certificate from the income tax department if there is any reservation. And then we come to the most important stakeholder, professionals like us. We professionals make lot of mistakes. Fortunately, the Goods and Service Tax Practitioners Association of Maharashtra has a mix of professionals. They have chartered accountants, they have advocates, they have company secretary and others also. We chartered accountants are the creature of emotional, we've been blackmailed by the clients. So whenever any charitable activity work is given to us, it has always been said that this is charitable work. Hence, we as a professional have to do it from the viewpoint of it is a charity. Means without verifying much of the records, we need to sign the records. We need not to charge any fees because we are doing a charitable activity. And ultimately, we land ourselves into a lot of trouble. Mind you, I would say that charitable audit is more and more complex than your public limited listed audit. Because here we are dealing with the public money, and here we are dealing with people who have contributed with an intention of doing something good for the people at large. So we need to be very, very careful out here. So as a chartered accountant, my only sincere request to whoever there as a participant is that please treat this also as a very serious assignment. Don't give just a thing that is a charitable activity work. So don't give a bypass and unnecessary, have any consequences from the government department as well as from our institute. I give you a very small practical example some 3 or 4 years back, which has happened in the income tax department. One of the very senior chartered accountant, very well-known chartered accountant, had some issue with the income tax department because he has audited one charitable trust, and the income tax officer, assessing officer, has referred his matter to the CIT exemption for taking disciplinary action against him. The matter came to us because I generally, have a lot of trust case. So the matter was referred to me, and when I came to know that what was the issue to this matter, I had gone to the office of Commissioner of Income Tax Exemption. I requested the commissioner that he is a very senior chartered accountant. Please see to it that no disciplinary action can be taken. I don't know, it was my bad luck or whatever it is. He said the letters are drafted, Gautam. The letter is already been sent to CBDT for the further scrutiny. And we have got an okay from the CBDT to take disciplinary action against the member by writing it to the institute. You will not believe the mistake was a very, 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 very stupid mistake. In the audit report, in the notes to accounts, the learned chartered accountant has written that he has done audit on a tax test basis. He has not done the full audit. Now his junior article must have given this, he has prepared the documents and given for his signature, and in good faith that chartered accountant further has signed that report. Ultimately, when we came to know about it, and when he came to know about it, it was very late because it was already submitted to the income tax department. Why there was an action by the income tax department is only because there were only 4 entries, only 2 bank interests for 2 branches of the bank where the money was lying, and that too there were only 4 entries, and in the audit report it was written that it was on a test check basis. So mind you friends, please, whenever you do an audit, do it in a very proper way. The last part is the stakeholder is the government. Government has always, I have seen of lately that, they are after charitable institutions because every year there are some or the other changes they are coming out with it. So they are tightening the law in such a way that a charitable institution really works for the public charitable activity only. And where there is a problem, because government has a different thinking, different definition about what is a charitable activity. They go with section 215 of the Income Tax Act, and based on that, they scrutinize any of the charitable activity with an intention to generate a revenue for the income tax department. I think in my career of last 35 years, there was never a target given to a charitable trust department for any collection of revenue. This we saw only last 4 years, where the targets are given to the charitable trust department for the tax revenue generation. And the target is not small. The targets are in thousands of crores nowadays, because lot of charitable institutions are doing a business in the guise of taking exemption, and where they have landed themselves into a tax net, and where the tax is payable and litigations are going on. So here government is tightening law day by day and making the charitable trust and the trustees' life miserable, because the charitable trust are governed or managed or administered by the people who are not themselves so educated, who are themselves not a full-time people who are devoting their time for the charitable institution. And hence there could be a lacuna in that. Like someone said, that why not you, or that is, they said to me that why not you invest in a share market? Share market is not that I have to be a part-time person now. I have to give my 100% to share market if I have to earn money. The same is the situation for a charitable institution. If suppose you want to really do a public charity activity, you have to give your 100%, and you have to have a professionalism now. We have heard about professional people controlling a public limited company, a private limited company, and a lot of other institutions. The same is required for a bigger charitable institution if it has to be managed and administered properly, because the compliance are so heavy nowadays that even being a specialized, having a workforce of 35 people working only for a charitable department, still we are not able to manage. We also blunder, sir. So mind you, please take any charitable work with a lot of, I would say, seriousness. So I'll just start my presentation. Is it fair to introduce new provisions, new rules, new acts day in, day out for charitable institutions?
Sir, you'll have to share the screen. I believe you've not shared your screen.
Acha, it's not been shared?
No, sir.
Oh,
You close the sharing.
1 minute, 1 minute, 1 minute.
Gautam bhai, whatever you feel to share with our participants, you are free. And very rightly, you have started the session about the basic purpose of the trust and the role of trustees and the auditors. So I think you are on a right track. Whatever you feel like, you can take it up and continue in the time given to you, sir.
Yes, Deepak bhai, I rightly said that I am not a Supreme Court judge. I'll be giving you what is there from my heart, sir.
That's very nice, sir.
Now the screen has come.
Very nicely you are putting up.
Yes, yes.
Yes, it is visible.
Yeah, 1 minute. I'll start the screen share. Yeah.
Yeah.
Right.
Yeah.
It's
Like I said, it is
perfect.
fair to introduce a new provision, new rules, new act. 1 minute. I just. Yeah. I think it is necessary, because I've been into this practice for last many years, as I spoke to you, because charitable institutions are not being managed or administered properly, because the mindset is such that, people are thinking that this is a charitable trust or a charitable institution, hence everything can be okay. If no laws are followed, if the laws are delayed, if the filing is delayed, if the compliance are delayed, there should not be any penalty because it is a charitable trust. But what I have an objection out here is that don't change the law every second, because I have seen that last many years, every year there is some provision or the other which has been brought into, and it really disturbs the full planning of what a person who has created a charitable institution. Now let us take an example of a depreciation which was an allowable expenses. For so many years, there are so many judgments wherein depreciation as well as the capital expenditure which was claimed as an expenses was an allowable expenses. They brought in the law wherein now it is not been allowed. Either you can take a capital expenditure or you can take a depreciation. So what they did is they introduced one section, section 11, subsection 7, and wherein the depreciation will not be as an allowable expenses if you have taken a capital expenditure. The same happened with the dividend. Dividend, as we have been taught right from the day one when we started our income tax or when we did our CA course, is that dividend is exempt under section 10. Now, unfortunately, there was a tussle with one of the trusts, which is a very prominent trust of India, doing a very fantastic charitable activity, and they're getting crores and crores of dividend. Unfortunately, they had not been claiming that dividend as a normal income, and 85% of that was not spent. So the government thought about it and they changed the law that now dividend would not be an exempt under section 10. It would be a normal income and it has to be taken as an income under section 12 of the Income Tax Act 1961. So I have a problem here of you changing this law every day. The change is required. As I rightly said, change should be there. But you don't change it every day because that really disturbs what our planning is. As rightly been put by Nani Palkiwala, what I think sharing is still there, na?
Yes, sir.
Yeah.
Yes, yes,
What
it
is wrong with India is the pathological obsession displayed by the lawmakers who frame laws only with the tax evaders in mind, regardless of the enormous inconvenience and harassment to the far larger section of honest taxpayers. In this matter, one must have a balanced approach and sense of proportion. A department store which is wholly preoccupied with prevention of shoplifting is a sure candidate for stagnation. So this is going to happen. As I say that today, as I would compare 5 years back, every year, or I would say every month, we used to get almost 20 to 22 creations. Maybe it was a charitable trust, maybe it was a charitable society, or maybe it was a section 25 originally, now section 8. But of lately, I would say, because of this change in the laws, many people have stopped creating a charitable institutions. Hardly we get 7 to 8 creation nowadays in a month, hardly. No doubt, today also we get 15 to 16, but out of that, we identify and we are able to convince that the other 8 or 9 should not go ahead because the object for what it has been created, the purpose for what it has been created, and the mindset of the person who is creating is not matching with the charitable creation that what we follow. So here again, I would say that it should be, the law should be there, but it should be restricted. Before I start with what is a public charitable trust, and I have to only talk about public, I just give you a small distinction, what comparison about what is public and what is private. Because
Sir,
many
you
a
have
time,
to resume. Sorry to interrupt. You'll have to resume your slideshow. Yes, thank you.
1 minute. I'm not getting it now. 1 minute, 1 minute. Yeah. So many a times people get a private trust document and tell us that we want to go for an exemption under section 12AA. Now the new section has come, 12AB. And when we go through the trust deed, technically it is a private trust because it is for the benefit of the people for whom it has been created. So beneficiaries are a specific individual, it would be a private trust. Beneficiaries capable of asset amendment, I am able to identify the people. Like a trust which has been created for the family, for the daughter, for the son, for the wife. And that becomes an asset enable that, I'm capable of that, who are the beneficiaries. In a public trust, you cannot, because it is public at large. There are private objects benefiting specific individuals only. Here we have a public charitable objects. Private trusts are mostly fixed duration, 25 years, 30 years, 50 years. Public trust is a perpetual, it cannot die. It is a perpetual thing. The laws are maybe same. There are state laws. In Maharashtra, we have a Maharashtra Public Trust Act of 1950. There is a Society Registration Act of 1860 and the Companies Act of 2013. In a private trust, they have an Indian Trust Act of 1882. So this is a small comparison to understand that private trusts are different and public trusts are different. And they are not same. So, whenever you get any document, you should be clear what exactly it is. Some of the Maharashtra public trust issues. The most important thing which I have, I will take some time on that, is about drafting of trust deed. Whenever you get any assignment as a chartered accountant, and if the trust has already been created, please look into it that you go through the constitution, either a trust deed or a memorandum of association and rules and regulation if it is a charitable society, or a memorandum of association and articles of association if it is a section 8 company. Now this is the heart of everything, because whatever is written in the trust deed or the memorandum, rules and regulations, or MOA or AOA, you have to just follow that. Because once a trust is created, once you get a registration certificate from the respective department, then that has to be followed. That constitution need to be followed. But when I see certain trust deed which comes to my office, it's really in a very poor state, because most of the trust deed which are created either are through the modern techniques of cut and paste, or from a Google. I would say they take it from the Google, who is a very knowledgeable, today more knowledgeable than any person on this earth. And a combination of something is created, and no doubt they must have got the charity commissioner registration, they must have got the 12AA, they must have got the ATG. But somewhere down the line, if there is any scrutiny at a later date, that could be a problem, because the drafting itself has a problem. Means your pillar itself has a certain cracks in it. So it's bound to have some effect some or the other day. So please be very careful when you draft a trust deed. And drafting, I would always say, is an art. And it is a process wherein you have to involve yourself. There should be a lot of meetings with the settlers and the trustees to come out with what they want. It's not a situation wherein they say that, Gautam bhai, you please make a trust deed for you, whatever you like. It should not be a situation like that. And there are certain clauses which has to be there. Otherwise, you may not be given your exemption certificate nowadays. Like, for example, there should be a winding up. Now, I just, when I say there should be a winding up, just, a few seconds back, I said that trusts are perpetual. Then why I am referring there should be a winding up? Now, this is where the government has something in their mind which we are not able to understand. Because in 2015, a CAG report which was published stated that not a single trust deed has a clause of winding up. At the same time, we should have a clause that it is irrevocable. So I don't understand, but this is what the government has stipulated, and we have to follow certain times, that a trust deed should have both the clause. It should be irrevocable as well as it should have a winding up clause. There should be a clause where they are allowed to open a bank account. There should be a clause where you are allowed to sell the property. There should be a clause that you're allowed to take a loans. Now, these are small things which is going to have an effect thereafter, because if suppose you don't have all these clauses and tomorrow you want to, say for example, sell a property, you have to again file a scheme, go for the amendment in the office of Charity Commissioner. And I don't know who has, I have seen last time some 71 participants were there. I don't know who have visited this office, because this is one masterpiece, the 7 wonders of the world, where I think you should go and visit. And I would request this association to take out one trip for all your members to visit this building where this Charity Commissioner office is there, because this is the office where you get real peace. Because why I say this is that when you enter in the morning with your cases, and when you come out in the evening, and when you just come down and call your driver, please take out your car, and you speak so nicely to your driver, okay, please aap gaadi leke aaiye, and then you sit at the back seat. And then when you go to your house, you are at peace. Why? Because not a single work has been done. You are just sitting outside doing, and they do nothing. So this is one department where I would always suggest, and that is why I say that whenever you create a trust that at least it should be valid, applicable for at least 50 years. 50, not 15, 50. Because any amendment, any change, first of all, professionally, the fees are very high. Secondly, the time taken is very bad. So please see to it that whenever you create a trust deed, take out some time, sit with the trustee settler, and then only go ahead. It is my earnest request, because this deed, this document, this constitution is going to save you in the every litigation that is going to come thereafter. Charitable institution, what are the popular creation? Trust, society, section 8 company. Why create a charitable institution? I don't understand why we create a charitable institution. Very simple thing, because whatever vision that I have, whatever dreams that I have, I want to convert that dreams into a reality, and I want to do public charity. Now, if I don't have any formal creation, it will die with me. But if suppose I have created a charitable institution, it's going to be perpetual, because this is going to go on and on and on and on, and it is going to serve whatever vision, whatever dream that I had, and it has been put in a paper, documented, so that it is going to be helpful for the people at large. What are the responsibilities of the settlers and trustees? As far as settlers are concerned, they only settle the trust. If the settlers become the trustee, which is allowed, a settler can be a trustee also. So there can be a dual role. A settler can be only a settler can be a trustee also. Then he puts himself into the shoes of a trustee, and there is an unlimited liability for that. And today, being a trustee, please be very clear. It's really very, very bad. Again, to give a very practical example of one of the prominent hospital in Villepalla, the Charity Commissioner himself went to that hospital to find out whether there are any charitable beds as per the norms which are fixed by the government of India. So he went in a dress which was like a beggar dress, like a bhikhari event. And he requested the counter, on a counter, that I want to get admitted. I am a very poor person, so I want to get admitted to that hospital. The gentleman who was sitting on the other side said that, sir, you will not be able to afford this hospital because it is a very, very costly hospital. He said that there is some rule in the government. They have certain things for the poor people. He refused. He said he would like to meet the management. So that person took him to the management, and the management also said, I'm sorry, we could not, give anything because right now our hospital is full, and it will not be possible for us to give you any admission, nor you will be able to afford our hospital. Thereafter, he showed his government card that he is himself a charity commissioner. Next day it came in the newspaper also, and in the newspaper it was clearly depicted that what exactly happened. And the trustees who were the trustees of that hospital, who charitable trust who was running that hospital, were called and prosecuted. Fortunately, unfortunately, no imprisonment was given to them, but with a warning it was left to them. So I am telling you, now it is possible for the trustees and the other management that there can be an imprisonment like what they have now given to the auditors also. Now for the chartered accountant, it is very easy. Our second home is always, what it is. It can be any of the good place that they have, government of India has given to us. So here, now trustees can be taken for a task, and they can be really being prosecuted, and they can have a tough time. As I rightly said, charitable trusts are not a tax planning tool. Never use this as a tax planning tool. What is the role of trustees and public? As already we have discussed that. Whether charitable institution can undertake business activity. This is very, very complex question, but let me attempt and tell you what exactly it is. Business can be undertaken by a charitable institution, can be. It's not, it is barred. But there is a, we need to follow certain rules for that to be applicable. As you must be aware of section 215, there are almost 7 limbs: relief for poverty, education, medical, yoga, preservation of natural resources. The last limb, advancement of any other charitable activity, that's a limb that we need to be worried about, because most of the assessing officer, most of the income tax department, they will put you in that last limb only. But the law is very clear that if my dominant activity is a charitable activity, and if I have a business which is incidental or related, then I can do that business. Now, let me give you a very simple example. Let us take our hospitals, all the charitable hospitals which are there in Bombay or elsewhere in our country. All these charitable hospitals have a medical shop. Now that medical shop caters to the medicine to the patients who are there in the hospital, as well as to the people who are in the vicinity of the hospital. And they sell that medicine at a price which has been there. It is a price MRP which has been quoted on that medicine. The department was of the view that that medical shop is a business which has been undertaken by the hospital. So your exemption under section 12AA, now 12AB, should be cancelled. And whatever revenue that you have generated, whatever receipts that you have generated, should be taxed at MMR, maximum marginal rate. A lot of argument happened. Ultimately, it was settled now that if any of the business is incidental, because without this medical shop, your hospital will not run. And my dominant object is to run a hospital. My dominant object is medical activity and not my medical shop. If my dominant object is medical activity, then I don't see any reason why any business which is related to that dominant object will be brought to tax or will not be allowed, where the exemption can be lost. Now let us take an example. What is a business? Lot of these associations which are created. For example, Transport Association, Transport Operators Association, or for example, Doctors Association, or for example, our Bombay Chartered Accountant Association Society, or for example, your Goods and Service Practitioners Association. Now here the distinction is very clear. The Transport Association or the Doctors Association, they cater to their own member for their own benefit. There was a lot of argument for this association wherein they stated that all the seminars or whatever the things which are conducted for the welfare of the members who are there, ultimately it is benefiting the public at large. But the government said that initially it is benefiting the members only, and thereafter it is benefiting the public. For let us take an association of the doctor, which is a charitable institution, and they are conducting a seminar in a big way. So in the seminar, they teach the latest technique of what is there as on today to the doctors who are attending. The doctors learn that technique, and with that technique, they increase their professional fee. And at the side by side, they say that it is benefiting to the people at large. The government of India, the income tax department has said no to it, and their registrations have been cancelled. Now let us take an example of a Bombay Chartered Accountants Society or our own Association of Goods and Service Tax Practitioners Association. You see what was your main object. I go through that main object. Its main object is to educate the public in general and the members in particular. So what is our main object? Is that we are educating the public at large. There are a lot of seminars you must be conducting for the public at large. What BCAS is also doing, where we have a charity clinic, we have RTI clinic, we have corporate clinic, we have n numbers of things for the public at large, so that we actually are doing charitable activity. So here I would say that business activity is allowed, but it should be incidental or related. It cannot be a standalone activity. Tomorrow I cannot start a factory or I cannot start a manufacturing activity and say that, I would like to come under the charitable institution. It cannot be like that. You cannot say that, my competitor is selling this material for 100 rupees. I'll be selling it for 95 rupees. So I'm doing a charitable activity work. No, it cannot be done like that. If it has to be, if it is business, it should be incidental or related activity, then only it will be allowed. Now let's go to whether charitable institution can generate surplus, and if yes, whether the term charitable will be misconstrued. There was a lot of debate when all the charitable institutions like schools, hospitals were generating surplus. And when this surplus was generated, immediately the notice came from the department that you are doing a business because you are earning profits, hence you are not a charitable institution. There was a Supreme Court judgment in the case of Queen's Educational Society versus CIT, wherein it made to rest everything that generating surplus does not mean you are not a charitable institution. If the intention is to earn profit, mind you, please understand what I'm trying to tell you. If the intention of a charitable institution is only to earn profit, then it is not a charitable institution. But by doing a charitable activities, and if you generate surplus, 100% you are a charitable activity. You are a charitable institution. So here also surplus has nothing to do with it. and it will be continue as if it is a charitable institution. What care must be taken to maintain the true essence of a charitable institution? Care has to be taken very much is that we should act as a charitable, we should perform as a charitable, our activity should be a charitable activity, and then only you can be told as a charitable institution. Otherwise there could be a problem, because many a time lot of these charitable institutions venture out and do certain activities, and it comes as a business, and it could not be a public charitable objects, or it cannot be termed as a public charitable activities, and it could be a problem. Again, an example: when an object clause are drafted in a trust deed, many a times you have seen in a trust deed there is an object clause which are drafted 1 2 3 4 5 6, and there are 100 objects, all standalone objects, all standalone. In the some objects they have written that we will construct gymnasium. Now a standalone gymnasium cannot be a public charitable activity, but if that gymnasium is been linked with an education activity, and we say that in a college or in the university or in an education institution there will be a gymnasium, then that would be a related activity. An education institution having a Starbucks outlet or a tea villa outlet or any of the famous eateries, still it would be construed that that is a charitable activity, because my prime focus is on the education activity and not that Starbucks or that tea villa or that eatery. So please try to understand what I'm trying to tell you here is that don't lose your focus from the main activity. Do the main activity in a proper way. Rest, everything will get along. Initial hiccups may be there, but ultimately it's going to be a smooth functions for you, smooth thinking for you, and it should not be any problem. These are the sources of income, that is voluntary donation, normal corpus, grants, interest, dividend, rent, income from other sources. Corpus is creating a lot of problems for us nowadays, because there is a change in the definition of income under section 213, wherein they say voluntary contribution, and that voluntary contribution includes even corpus donation. Many a times we are facing income tax problems, income tax department problems, because many a times this corpus, they don't treat it as a corpus and they take it as an income. And many a times, it leads to litigation, unnecessary, taxation which have been levied by the income tax department. So to cut short all this thing, the corpus should be supported by a corpus letter. It's not necessary that corpus letter should be there. Let me be very clear with you. But to buy peace, it's always advisable to have a corpus letter. Grants are income if it is a normal grants. If it is a specific grants, then it could be a balance sheet item, it could be a corpus. So I will now take you to the computation part of it. As Deepak Bhai said, try to make a computation also, and to understand what exactly how a computation is made. Here the computation of a trust is never a computation which is headwise, because we make it on a commercial principle which is allowed to us, where only the income is there and the expenses are there. We don't go headwise, like if there is a rental income, the rental income, we don't go that it is from the income from house property. So here again, we need to be very clear that it cannot be treated as an income from house property, and 30% deduction or whatever that allowable expenses that is allowed to you will here also be given to you. No, Here, whatever rental is there, it is be your total income would be as a income. So there is a rental income, there is a interest income, there is voluntary donation, there is a corpus donation, there are grants, specific grants donation. So it's a total of 29 lakhs rupees. This is an expense where you know what exactly would be. The corpus donation and specific grants would be exempt under section 11(1)(d). There's a specific exemption in the 11(1)(d) by the income tax department. There's a 15% accumulation under section 11(1)(a). Now this 15% accumulation, there is a problem because department thinks that it should be after the administrative expenses and expenses on the object of the trust. Thereafter 15% has to be taken. But now this has been settled. There is a Supreme Court judgment for it that it should be 15% of the gross receipt. So here the gross receipts where the corpus donation will not be allowed because that is not an income which will go to a balance sheet item. So 15% of your 18 lakhs 70,000, that would be 3 lakh 30,000 would be your system. There's an administrative expenses of 2 lakhs rupees and expenses on the object of the trust is 5 lakh. There's a net taxable surplus of 11 lakhs 70,000 rupees. I have given you two options. There's a third option also that I will discuss with you. The first option is that either we accumulate this for 1 more year by filing a form number 9 online on or before the due date of filing the return of income. And this can be utilized in the subsequent year. Or you can accumulate this income for 5 years by filing online form number 10 along with the resolution stating the specific purpose for what this money is to be utilized when you are going to utilize at the end of the 5 years. Or there is one more option, you pay tax on it. So these are the simple thinking which is there. Now again, the tax part, there is a controversy. Department is charging flat MMR, that is 30% plus the surcharge. When we calculated, we go as an individual taxation because trust taxation is equated to individual taxation. They are AOPs, association of persons, which should be individual taxation. Now, these are the new provisions which has been introduced last year. The last date was 31st August, which was again extended to 31st March 2022. For the first time, the government has really realized and they have given an extension which was really required because there was a lot of problem with the portal. The portal is still not working and it is creating a havoc. So what the government has done, the government has really changed the full thing. Earlier, we had a registration under section 12A. Whatever registration was done before 1996 was under 12A, and after 1996, it became 12AA. Both are same. There's nothing. 12A became 12AA. Some relaxation was given. So either a charitable institution was having a 12A or a 12AA. There were certain charitable institutions who did not have a 12A nor had a 12AA. Either they must have misplaced the certificates, or in 1973 when this became compulsory, they did not apply for the exemption. Two possibilities. So many times we had a problem of filing the income tax return of such trusts who are actually a charitable trust, doing fantastic charity, very good charity, but they did not have a 12A or 12AA, and unnecessary tax at a maximum marginal rate was paid by them. So a representation was made, and in this representation, they came out with a new provision of 12AB. Now this 12AB is only for 5 years. Now this need to be applied between 1st April 2021 to 31st March 22 in 1 year. And you will be allotted a new provisional certificate for your exemption purpose. New scheme for re-registration, you need to apply in form 10A and 10AB and within a specified point, which is on or before 31st March 2022, to the Principal Commissioner of Income Tax of CAT exemption. Why this has come out of it? Because the argument or the justification placed by the department, by the government, is that rationalization of the charitable laws, uniformity, transparency to provide an electronic database. Old trusts registered, however, have misplaced their registration number, nor the income tax department has any records of the same. New trusts facing difficulties due to non-commencement of any activities, lesser scrutiny, lesser roving inquiries, weeding out the dormant trust. So this was a reason for introducing the new scheme, and an order will be passed where a 16-digit unit registration number would be given. So not what will happen after 31st March 22, all the trust who have got themselves registered under this new registration, they will be giving a 16-digit unique registration number, and that the department will be having a records of now how many charitable trusts are alive, how many charitable trusts are in process, like they are actually doing certain charity activity, and one by one thereafter they will be taking that for scrutiny. This is what I'm going to share with you. It is very simple. When to apply, what is the period for which the registration will be given, and this is, this I'm going to share, so I'm not going deep into it. So there are six applications that to be made. Fresh application, thereafter, once you get that renewal application, if you change your object, there should be an application. If it is a new registration, in another few months, you need to again apply. So different forms are there for the different situation. And when it is to be applied, different situations are given to you. Same way is for the reapproval under section 1023C and ATG. Here they have also, now they are also is for 5 years only. Originally ATG was for the lifetime, but now again ATG is also for 5 years. 1023C also is for 5 years, and the same procedure. But here there are 4 things, 4 situations, 4 forms, when to apply and when to go for it. So this is a re-registration, reapproval, what the Finance Act 2000 introduced. I will just read, I will just keep it for you to go through. It's just information given to you. CARE will, while filing a Form 10, this I would like to discuss for 2-3 minutes. Read the instruction at the end of the form very carefully. Follow the instruction at the time of filling up the form. Wherever the fields are compulsory, you need to fill up, otherwise it will not allow you to move ahead. Section code is very important. I'll come to it why it is very important. For all re-registration or provisional re-registration or reapproval or provisional approval, select the applicable code. Whether trust deed contains a clause that a trust is irrevocable. Because if you see Form 10A, lot of debate happened on this issue. Because if you see the olden trust, there was never a clause of irrevocable. And there was never a clause of winding up. Because both the clauses are irrelevant because there is a golden rule that once a trust, always a trust. It is a perpetual thing which has been created. So here I don't understand why this has been there. So most of the olden trusts, they will not have this irrevocable clause. So you have to write just plainly no to it. Don't write anything wrong. Don't say it is yes, and if it is not there in your constitution, write no. Your provisional registration will never be cancelled. Mind you, it is going to be there 100%. They are going to give it to you. I don't know, somewhere, in the WhatsApp, someone has written that, 50% of the registrations have been cancelled or they have been, rejected. I on my personal, phone call to the member concerned, he has denied that such situation has happened. Maybe there could be a technical glitch, but otherwise I would say that no, it will never happen. Everybody would be getting a provisional registration for sure. Only the trusts which are in problems, they will not get a provisional registration. Now, date of registration with Darpan portal, this has become very important now. Darpan number has to be taken, and a portal, you need to have a registration of that number which has to be entered. Then only your Form 10A will go. FCRA registration number is required if it is applicable. Details of author, settler, founder, trustees, members of society, members, all this detail has to be filled up. And thereafter, you have to just file that online. Whether the registration requirements state that documents have to be self-attested, will signature of one trustee be sufficient? Do we require rubber stamp? Even one signature is required, even no signature is required, it is okay. You will get your provisional registration. Form 10A has to be digitally signed, or whether EVC will be allowed. Right now, both are not working. Only thing which is working is OTP, which is working. So we are doing it with OTP. When Form 10A need to be filed today, don't wait for tomorrow. What are the documents need to be enclosed at the time of filing Form 10A? Basic documents, if you have filed your return for assessment year 2021, and if it has been filed within the due date, then there is hardly any document you need to attach. No audited balance sheets are to be attached for last 3 years, because that is not a condition. No provisional balance sheet no provisional accounts have to be filed. No projected accounts are to be filed. If you have submitted your return for assessment year 2021 before the due date, because once you open up that form, that column comes pre-filled, and whatever other documents that has to be enclosed, it gets, it gets blocked. So you don't have to worry about that. Form 10 is not filed on or before 31st. What will be the consequences? Actually, there's a mistake out here. It should be 31st March 2022 now. So the consequences are very heavy. Your trust would be deregistered. It would like be your, unnecessary, that would be a tax liability on it. And there could be a lot of consequences. So be very sure that you apply your Form 10A on or before 31st March 22, because once you lose the registration, it is very difficult for again to reinstate. So mind you, please do that. What is the remedy if Form 10A is rejected? Whether you registration reapproval is rejected, the remedy is only to file a writ petition, or either to go for a writ petition or to file an appeal in IT80. Nothing clear right now, but this is just a guess that we have, because there's no clarification from them. What is the situation when your ATG approval is accepted and your 12AB is rejected? Very funny situation, because cannot be possible, because 12A has to be first, and thereafter ATG can only be given, because unless until 12AB is there, your ATG cannot be approved. But anything can happen because of the online submission which are right now happening. If your application for re-registration is rejected, whether section 115 TD will be applicable? Yes, it will be applicable. In case of those trusts who presently have 2 exemptions under section 12AA and section 1023C, what will happen to those? How are they supposed to re-register? What switch is possible? There is a lot of debate here also, because there are a lot of trusts who have both the registration and approval under 1023C as well as exemption under section 12AA. My view is that you should go for 1023C, because 1023C, because there is a provision in the Income Tax Act wherein one switch is allowed during the lifetime, and that switch is only once you select 1023C, and if you want to revert back to 12AA or 12AB. But suppose you have selected 12AB right now, you cannot go lifetime to 1023C. So always I request all my trusts to go for 1023 first, and thereafter you can go for 12AB if you are not satisfied. What is the remedy for a charitable institution who already registered under 12A, but either the certificate is lost or misplaced and there is no record with the income tax? Whatever documents that you have, you file that document showing that you are a charitable trust, and you will get your provisional registration. Whether any further inquiry will be undertaken once the re-registration or reapproval is granted. Mind you, they are giving provisional registration. They are not giving you fixed registration. So there can be an inquiry. What happens to the pending application which are already filed on or before 31st March 2021? They are with Commissioner of Income Tax Exemption, Bangalore. He is the only officer who is processing this. Time has been taken because from everywhere, all the documents are given to him, because he's the only officer who is authorized to give the 12AA and the ATG of the olden date, which we have filed on 31st March 21. And this application which are filed on 31st March 21 will automatically get converted into the new application. You need not file a fresh application for that. What will be the applicable date for application filed on or before 31st March Question mark, no one knows about it because there is no provision in the law. So whatever the dates which are given by them, it is not applicable out here. This is very, very important amendment which has come by the Finance Act 2021. Nowadays, when there is any corpus donation, that corpus donation cannot be utilized now. It has to be compulsorily invested under section 11(5). So there should be a matching concept. I have given an example for your ready reference, but I just take 1 or 2 minutes here. Let us say you received 10 lakhs as a corpus donation. Initially, there was not a concept that it has to be invested. No doubt, it can be a bank balance, it can be utilized for the object of the trust. But now it has become very compulsory that you have to first have an investment under section 11(5). So there should be a matching thing. So henceforth, whatever donation comes, that donation has to be kept separately. Corpus donation received after 1/4/2001, and there should be an investment separately. Investment of the corpus donation received after the 1st April 2021, that needs to be matched. So utilization out of corpus or specific donation or out of loan received will not be treated as an application. Initially, what was happening that where corpus donation was exempt under section 11(1)(d). Or what we used to do is that with this corpus donation, I was buying a property. So what I was taking effectively 2 exemptions. One, whatever was corpus donation, I was taking that as a capital receipt directly to the balance sheet. And when I was buying an asset, that asset was taken as a capital expenditure under section 11 subsection 1A of the Income Tax Act 1961. So it was twice I was getting a benefit from one thing. So government has blocked this now. And now only you will get exemption if there is a fresh investment from the current income. Current income means not from the corpus donation, from your normal income. If you transfer certain fund to the corpus, and if that is becoming an investment, then that investment or that transfer will be an application of money. There was a famous case of Subros Education Society. As you can see, most of the trusts are incurring a deficit, and that deficit was not allowed to be carried forward and adjusted. There were a lot of case laws which was supporting them, but the department was not giving us that excess amount which was spent, the deficit which was there. The Subros Education Society judgment of Supreme Court opened the Pandora box, and they gave the trust the right due that now whatever deficit that you have can be adjusted against your future surplus. Again, as I pointed out, the changes which the government is making, the government blocked that by introducing a law that henceforth no deficit will be allowed to be carried forward. So again, wherever there is any beneficial provision to a charitable institution, the law has been created, and that law has been put in place so that no charitable activity gets any benefit. This is an illustration. It is a self-explanatory. If you just go through it, you'll be able to understand. There's an annual information statement which will now come, which will replace 26As, giving more information. The tax deducted or collected at source, specified financial transaction, payment of taxes, demands and refund, pending proceedings, completed proceedings. So this, they will be giving it in AIS as in information statement. So it's going to come in a big way, and still not been introduced. Still 26As is there, but they are going to come out in a few days. That is what they have promised. Again, there's a change now. One more task has been given to the trust. Like we have become agents for the government. So now a trust also has been made an agent, that whatever donation is been given, it has to be reported in Form 10BD on or before 31st May 2022. Now this has to be filed, so that once you file this, the trust files this on a portal. Let us say Gautam Shah has given a donation of 10 lakhs rupees to an XY charitable institution, XY charitable institution has to upload this, my details of form 10BD. So automatically in my income tax account, that will be, pre-filled and comes. So a lot of this, people who are misusing the donation, many a times we have seen that these donations are just been taken like that without any basis. There is no receipt, no donations are given and deductions are taken. So this will now go away with. These are what is that, form 10BD. This is how the, things which are there. There is identification number, PAN or Aadhaar number has to be written of the donor. Type of identification. If suppose I don't have a PAN and Aadhaar, then I can have a taxpayer's identification number of the country where the person resides, passport number, electoral, photo identity number, driving license, ration card. They have gone so deep, even the ration card number has to be put in so that the donor's identity is not been, that it is disclosed to everyone. Donation type, corpus specific, mode of receipt, cash, kind, electronic, others. So this is the rows which will be there and you have to fill up all the rows on or before 31st May 2022. There are certain controversial issues, like what donation in kind details required when the same is not eligible for deduction. Why you require that kind detail? I don't know, government has not come out with anything. Whether donation receipts to be issued as per form 10B. Yes, compulsory it should be issued as per form 10B. What are the consequences if the donation details are not filled up or not properly filled up? There are a lot of consequences. Penalties are levied on a trust and trustees, and ultimately it is a trustee is going to pay the penalty. As you know, there are a lot of trusts who pays income tax. Technically, income tax cannot be paid by the trust. It is a trustee who has to pay the income tax, not the trust. Again, before I end my session, I have overshoot for 5 minutes. Words of George Bernard Shaw. I am of the opinion that my life belongs to the whole community. And as long as I live, it is my privilege to do for it whatever I am good at. I want to be thoroughly used up when I die. For the harder I work and harder I share, the more I live. I rejoice. 1 minute, even I cannot see. I rejoice in life for its own sake. Life is no brief candle for me. It is a sort of splendid torch which I have got hold of for the moment, and I want to make it burn as brightly as possible before handing it on to the future generation. Question time, and really thank you very much. Thanks a lot.
Yes, thank you, sir, for such a nice presentation. We have, I'll say a couple of 3 or 4 questions. Would you want me to take it up now?
Yeah, please.
Yeah. Okay, so first question is by our own Joint Secretary Parth Badeka. What are your views on the other side of the government, which states that trusts are misused as fronts and thus the government is tightening the screws? Is the misuse so rampant that it necessitates such stringent and dynamic amendments? This kind of logic is also wrongly given for making tax laws difficult for voluntarily compliant people under the garb of few bad evaders. What is the middle ground according to you?
I will only say that, that is why I quoted Nani Palkiwala in my start of a lecture, that there are only few trusts. I would say, if we say 100, there would be 0.00001% who are misusing the trust. And the government is taking a shelter under that to tighten the law of charitable institutions. I have not touched upon FCRA, which is a draconian law, Foreign Contribution Regulation Act. Because when I take up that law, it's always, for me also, I feel like a lot of goosebumps which comes to me, because that law is one of the law. It's more like a punishment to a charitable institution. So I would say that, somewhere down the line, you require some changes. I am with the government, but considering that it's a charitable institution, somewhere down the line, the mindset of the people who are controlling this in the government department should have a charitable heart and mind in deciding the law which should be applicable. You cannot trust upon a law in the same way you trust upon the corporate world. The corporate world is governed by professionals. Charitable institutions are not governed by professionals. Only for the few charitable trusts which are now being governed by the professionals, it is not been governed by the professionals. So again, I would say that my feeling is that they want to kill charity. That is my feeling. Or they want to make it in such a way that only 1 or 2% of the affluent people can only run the charitable institution. This is my take on that.
Okay, thank you, sir. One more question is received from Mr. Kishore Adia. He says his client has had 10 in bracket 23C 6 approval and applied in form 10A for 12AB and 80G instead of 10AB and got the provisional registration number also. Are they supposed to reapply in form 10AB, or these certificates will do against 10A application received?
I think that is a very big mistake someone has done there. Or maybe it was unintentional, because while clicking, you have to select a section. It was a wrong section which was selected by the gentleman. The representations have gone to the CBDT, but there is no solution to it. Technically, right now, if suppose what the law states, and let me be very clear out here, I am not here to put you in lot of stress. I'm here only to tell you what the law is and what you have done for that. I am just trying to explain what the law would be. That your 1023C is a bye-bye now, lifetime. You will never be able to apply for your 1023C because now you have selected 12AB. Maybe by mistake, but this would be a situation. The only remedy which I see right now is you to write immediately to your nodal officer. If it is Bombay, you write to your Commissioner of Income Tax Exemption, and you write to Director of Income Tax Exemption, who is based in Delhi, with the facts that what has already happened, and let us wait for the solution to come. This is the first thing you need to do immediately, so that you put it on paper that there is a mistake. Because if you open up a portal now, then if you try to again go to 10A, and if you select your 1023C, whatever small homework we have done, it is not happening, my friend. It's not happening. Thank you.
Yeah, now one last question. I think it's by our joint convener Jatin Bhai. He said we have uploaded 10A form, but still we have not received any order. Now, what is the remedy which is available?
I think, if you have uploaded, you have an acknowledgement, just try to see whose email ID has been given, because sometimes what happens, it is always the trustees email ID which has been given, and the trustees or the people ID which is given, they don't access to it, or they don't understand that this is the acknowledgement or this is a provisional registration which has come from the department. Now, let us say after checking, you have come to know that it has not come. Make a small application to the Commissioner of Income Tax Exemption here. You will get a very, very clear answer that we have nothing to do with it, because right now it is CPC who is handling it. And the second option, still I would say that you write a letter to them. Then the second option is that CPC helpline. Try to talk to them and see what is the status of your provisional registration, because after the new portal which has come, only very rarely some provisional registrations have come. And the in the old portal, whatever the provisional registration which were pending, they have not been able to issue that. So they are trying to work out certain thing, that whatever was applied in the old portal, to convert that into a new portal, or to transfer that into a new portal and get the registration. But it's going to take time, because Officially, they have been given time till 15 September by our Honorable Finance Minister. And so let's wait for it. And definitely now as such, till 31st March 22, the extension is there. So all your old 12AA, all your old ATG is applicable till 31st March 22 or till your provisional registration is not come, please.
Thank you, sir.
Yes, thank you, sir. I believe
Umang,
we've
can I
addressed.
take, Umang,
Yeah.
can I take 1 minute?
Yes, yes, please, please.
Please.
Yeah. I'm in so overwhelmed with the share of the in such a simple matter. Fantastic.
Can you
Gautam bhai.
keep the
Our
mic closer? We cannot
participants-
hear you.
Is it okay now?
Yeah,
Or
better.
yeah, is it okay?
Yeah,
Yes,
yeah.
sir.
Yeah. See, I'm in whatever you have shared is so much important, and in so simple way you have explained to all of us. I think there are 85 participants, and some of our participants might be the trustees of the trust, or the auditors of the trust, or the advisors of the trust. Let me tell you, everybody has benefited so immensely, and this will be very much of help. And everybody will go through the presentation whenever they come have some issues into this. Thank you, Gautam bhai. And you have said this particular event so important nicely, that now for our next faculty for GST impact on trust will be very smooth, and they'll be having you have set a nice stage, let me tell you. Thank you. You please go ahead. Yeah, Umang.
Thank you.
Yeah.
Thank you, sir. Thank you.
Thank
very
you,
much,
sir.
Deepak
Now
bhai.
I'll just hand it over to Premal Bhai for a formal vote of thanks. Yes, Premal Bhai.
Thank you, Umang. Deepak bhai summed up so nicely. So my job is half done, more than half done. But I'm pretty sure everybody would agree that Gautam Shah sir has been a settler in case of a knowledge of public charitable trust. And we all as beneficiaries would have immensely gained from his knowledge. And sir, your presentation with practical experience has really awakened us. And as Swami Vivekananda says, arise, awake, and stop not till your goal is reached. So I'm pretty sure everybody will try to gain knowledge on this very important topic of public charitable trust. And from the bottom of my heart, and with the GST Goods and Service Tax Practitioners Association of Maharashtra, we would really like to thank you for this brilliant exposition. Thank you so much, sir.
Thank you very much to everyone. Thank you.
Thank
Thank you
you.
very much.
Sir, we just received one question. If you want to take
Yeah,
it,
please.
it
Please,
is
please.
our past president Pradeep Bhai. I'll just ask him to unmute.
Yeah.
Pradeep Bhai, you can unmute.
Hello. Yeah, Gautam bhai, you said about that irrevocable clause. See, I think most of the trust, which are old trust, they don't have that clause of irrevocable. So what would be, because they are rejecting on that basis. Prior, on the contrary, the commissioner, I'm not talking about the renewal, whenever we used to go for this ATG and all that, then they were giving this query, your trust deed is not having a irrevocable clause. So we would not be in a position to grant you. So now what would be the situation here? And in many of the cases now, see, because the trusts are so old, they may not be having the certificates with them. So what is to be done in those cases?
See, Pradeep bhai, I would be very clear here that, what you said is in the past, a lot of this issue came up, and certain commissioners were very rigid about it. Certain commissioners were very flexible. But yeah, there was an issue, and we had a lot of problems at that time for taking exemption under 12AA. Now, as far as the new provision, that is 12AB has come, it's made very, very clear that if suppose you don't have an irrevocable clause, your provisional registration will not be rejected. But right now, your provisional registration is only for 5 years. So once you are being granted this provisional registration, you need to go to the state law. If it is a charitable trust, we need to file a scheme under section 50A subsection 1 of the Maharashtra Public Trust Act of 1950. If it is a charitable society, we need to file under section 12 of the Society Registration Act of 1860 and 22 of the Maharashtra Public Trust Act. And if it is section 8, we need to go for the amendment in the memorandum and articles of association. So you have been given now 5 years to look into it, because once you know that your trust does not have it, please comply with it, because once you go after 5 years for the renewal, at that moment of time, if you don't have an irrevocable clause or a winding up clause or other certain fixed clause, you will land yourself into problem, and your renewal at that moment of time would be rejected. Right now, it will not have any problem. Right now, you can continue, please.
And sir, regarding non-availability, because the trusts which are so old, for renewal, they've asked for all these documents. There are certain documents which are not available. At that time, what is to be done?
See, base, I would say that let us take an example that suppose you don't have your 12A, right? Very simple. If you have a 143 order, any 143 order,
okay,
that would do. If you have a 141 1A order also, I'm telling you, intimation only, even that will do, sir. Or if you are able to demonstrate by your trust deed, by just highlighting the charitable objects which are there, even that will do, because already you are going to submit your charity registration certificate,
okay,
right? And already you will be submitting your, if at all, if you have any of this order, you have to have any documentary evidence, any piece of documentary evidence stating that you are a charitable trust, that would suffice for the time being. And you will be granted your 12AB for the time being, and that would be a base document.
okay. Or can we apply for the duplicate by that time?
If you have 12AB, you know it is there, because lot of this trust, even the records are not there in the Office of Income Tax Department. So if you have it, please go for the duplicate. Immediately it will be granted, because right now the commissioner who is heading, Mr. Anurag Sahay, is one of the gem of a person, I would say. A few commissioners who come with a golden heart, a charitable heart, this person will really help you to the core and will give you a certificate if it is available on the spot, sir. There are certain formalities which we need to follow, and thereafter you can get your duplicate certificate what you want. I think you have enough time right now, because now it is extended to 31st March 22. And you can even go to the portal. I think right now it is not working, but you can just see into it if there is a number. If you have a ATG certificate, of lately in ATG certificate also, they were putting that 12AA registration number. That number is very much enough for you to go ahead with it, sir.
That may be, that is for this 12AA, but not for 12A, they were not putting it.
Exactly. 12A, I think you go for a duplicate only, sir. Please.
Okay.
Pradeep bhai.
Okay. Thank you,
sir. Thank you, everyone.
Yes, thank you, sir. Alok bhai, just you had
Umang bhai, Deepak bhai, I'll be leaving, sir.
Sir,
Yes,
Gautam bhai,
I'm sorry.
Gautam bhai, 1 second. I think it was a really fantastic lecture.
Alok
And I really appreciate Deepak bhai, Umang and Jatin bhai to bring you in this platform of GSTPAM. Really,
anytime, Alok bhai. Anytime, Alok bhai. Anytime.
So I'm really happy. Thank you so much for being with us. This is what I told to my team, that we want to have a new people in our platform, so that we can hear their views and all. And rightly Deepak bhai has brought you over here. I think it was fantastic, sir. Everything you in nutshell, you simplify such a good manner that we understand the law very quickly. And all. Thank you, Gautam bhai, once again.
And I would like to convey my sorry to the speakers who are going to there. Sir, please excuse me. I will not be there. I would have really loved to hear you, but as my positions are going on, this is my first day. So please allow me, sir, for today.
No problem, sir. Thank you.
Please,
I would like to thank you for the master class. Thank you.
Sir, so sorry. Thank you, sir.
Thank you
very much. Thank you.
Yes, just a small announcement. I think we'll take a 5-minute break, 5-minute comfort break, and we can resume by 4:40. So we'll just take a 5-minute comfort break, and we will begin in time.
Not to log out, right?
Yeah, you please request everyone not to log out. It's just a comfort break. Yes, thank you. The speaker has already arrived, and we can start within time. Yes, thank you.
Shall we start now? One.
Yes, yes. Welcome everybody back after a break. So now we actually had two speakers, Aditya Surte and Aditya Seema Pradeep, but unfortunately due to some unforeseen circumstances, Aditya Seema could not join us. However, Aditya Surte has agreed to also cover the part of what Aditya Seema was going to take. So we are eternally grateful to Aditya for accepting this request at the very last moment. to formally introduce him, I'm sure he requires no introduction. Formally introduce him, I would request Premal Bhai. Premal Bhai, please introduce the speaker.
Thank you, Umang. You rightly said Aditya does not need an introduction, but yes, I will have to do the formal introduction. So Aditya Surke is a BCom and chartered accountant. He's practicing chartered accountant, focusing directly on indirect tax and specializing in GST. He's been a consultant to various corporates and business entities on GST. He's been regularly delivering lectures on GST and various seminars organized by various professional and trade organizations, including GSTPAM. He's been a visiting faculty at the Management Development Program of Wellington Institute of Management. He has been awarded the Best Upcoming Speaker in 2016 by AFTP. He's been a best paper writer on a technical paper at the 42nd RRC of the GSTPM in Bangalore. He's been writing GST articles in GST Review, which is published by GSTPM and Chambers Journal and WRC. He's been writing for short publications of transitional provisions in GST, which was published by the GSTPM. He has written a key rulings under indirect law, a GST perspective published by the Chamber of Tax Consultants. He's a managing committee member of the West Zone of AIFTP. He has been selected as a training faculty by Institute of Chartered Accountants of India for training in GST. And apart from the GST laws, his interests are deep, enjoys deeply semi-classical and classical music. With this, I'd like to hand over the mic to Aditya. Obviously, people would like to hear from him more than me. So Aditya, would like to welcome you, and the floor is all yours.
Thank you so much, Premal Bhai. Thank you for the kind introduction. I hope I'm audible.
Yes.
Yes. Before I begin, I wish to sincerely thank the association and Umang in particular for considering me and inviting me for this session. When he had called me itself, there was Gautam Bhai's name there, and I had told him at that time, and today I repeat it, that it's an honor to be sharing the same stage where the speaker is such a learned, experienced and expert person. So I repeat, that was a master class by Gautam Bhai, and it's a privilege to carry on with that same tone. It's also an onerous task. I will do my best. Let us begin. I have been asked to cover the GST impact on charitable trusts. I hope my screen is visible. No. Just give me a minute.
Not yet.
Okay.
You will have to share, huh? Share your screen.
Yeah. Okay. Visible now?
Yes, Aditya.
All right. Okay. So I will be speaking on the GST impact on charitable trusts. I am going to try and cover what my friend Aditya Seema Pradeep was also supposed to cover at the end of the session. Let us quickly go through. We have heard quite a lot about what a charitable trust is and on charitable activities. So that has made my task fairly easy. I don't have to go deep into this. So for a layman, okay, let us understand from a layman's perspective. If you see the dictionary meaning of charity, you will see a lot of such words, such as generosity, helpfulness, benevolent, public purpose. It's a gift for public benevolent purpose. It is relief of the poor. So for a layman, what charity means, or what a charitable institution or a charitable trust is, it is basically something that is helping that section of the society which is in need of help. If you ask a common person, whether do you think that a charitable trust is conducting any business or undertaking any business, or charitable trust is a business entity, their answer obviously is going to be no. The reason being that the nature of its activities are charitable or philanthropic, There is absence of pecuniary benefit or absence of a profit motive. Therefore, they will say that it is not a business activity. As we have already seen, that the constitution of such an entity can either be a trust or a society or a Section 8 company under the Companies Act 2013. For the purposes of tax laws, however, whether an entity is considered to be in business or not is going to be determined by that particular enactment. Since my area today is restricted to GST, let us see first and foremost, before going ahead, what is the scope of GST in relation to charitable trusts or charitable institutions? We must bear in mind that GST is a transaction-based tax. So GST is a tax on supply of goods or services or both. Okay, we are all members of GSTPAM. All the basics are very clear with us. So I will move ahead. We all know that in order for an activity or a transaction to fall under the scope of the GST net, it has to be supply. It has to fit into the definition of supply under Section 7. Section 7 of the CGST Act defines supply as supply includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease, disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. I am concentrating on these three very important terms in order to understand whether a trust is going to fall under the GST net. In order to fall under the net of GST or for GST to apply to a charitable trust, it must first fall under the definition of a person. It must be the supplies that it is, or the activities should be for a consideration, and they should be in the course or furtherance of business. Now, person has been defined under clause 84, business under clause 17, and consideration under clause 31 of section 2. Let us quickly go through each definition and see. So, person, as per the definition of the CGST Act, includes individual, HUF, company, firm, LLP. If you see the definition, the second last part is a trust. If you talk about a Section 8 company, the third clause is company. And AOP or BOI is also part of person, whether incorporated or not, whether inside or outside India, is also included in the definition of a person. Therefore, what we can determine first is that the first part is a charitable trust is a person for the purposes of the GST law. Number 2, business. It says that supply when in the course or furtherance of business. So for the activities of a charitable trust to fall under the ambit of GST, it should be determined as per the GST law that it is in business. The definition of business includes any trade, commerce, manufacture, profession, vocation, adventure, wager, or any other similar activity, whether or not for pecuniary benefit. They have very specifically provided in the first clause itself that any trade, commerce, manufacture, etc., whether or not it is for with a profit motive, it is going to be considered in the definition of business. Second clause, any activity or transaction in connection with or incidental or ancillary to any trade, commerce, etc., is also part of business. Third clause, any activity or transaction in the nature of trade, commerce, as stated above, whether or not there is volume, frequency, continuity, or regularity of such transaction. By the third clause, what they mean to say that even if it is an irregular activity, or you can stretch it to say that even if it is a one-off activity, there is still a possibility that that activity can be considered as business. Therefore, whether a particular activity being carried on, so can a person state that Gautam Bhai gave multiple examples where there is a business being conducted which is for ancillary purposes, where the main object is that of charitable nature. Such businesses are allowed to be conducted. There can also be a surplus from such activities. So can a person state that the activities that I am conducting, or the business transactions, or the transactions which are seemingly business transactions, are not undertaken with a motive to earn profit. I am only undertaking these so that I can provide for my main objective of charity. Whether contention can be made that therefore these activities do not fall under the ambit of the definition of business. In this regard, a very famous judgment of Sai Publication Fund under the BST law. Now, Bombay Sales Tax Act 1959, I will give a quick background of this judgment. See, in this case, a trust was created with the primary object of spreading the message of Sai Baba of Shirdi. In furtherance of and to accomplish the said object, the trust published books, pamphlets, and other literature containing Sai Baba's message and sold them at nominal charge just to meet the cost. They did not make any profit out of it. The sale proceeds of the publication formed the property of the trust, which could only be utilized for advancement of the objects of the trust. Please bear in mind that the primary object of the trust was to spread the message of Sai Baba. So the primary object of the trust was not a business activity, although an ancillary activity was being undertaken that was only to support the primary activity, which was of spreading the message of Sai Baba of Shirdi. There was a specific provision in the trust deed that in the event of failure of the trust to carry on its aims or objects, the remaining fund in its hands would be handed over to the Shirdi Sansthan. The Supreme Court, in this case, in order to appreciate what the Supreme Court held, we must understand that the definition of business under the Bombay Sales Tax Act 1959 at this time was very similar to the definition that we have under the GST law. In as much as the definition provided that whether or not such activities, trade, commerce, or any other adventure is undertaken, whether to earn profit or not, whether any profit is earned or not, or whether they are carried on with a motive of earning profit or not, they will still be considered as business. In this case, there was also a second clause which stated that any ancillary activity, and the entire dispute was on this part, is as to whether any ancillary activity undertaken can be considered as business. The department was of the view that since there is a second clause to the definition of business, which states that any activity is ancillary to your trade, commerce, manufacture is also part of business. You are in business, you are a dealer, you should be paying tax on sale of books. The Supreme Court stated that the primary activity or the primary object, which is falling under the first clause of the definition of business, where that itself does not fall within the meaning of business, in that case, second clause of any incidental or ancillary activity can never be considered as business, because the second clause will only come into the picture where your primary activity can fall under. Now, when we move ahead, we will go through an advance ruling, which in my, if I am not mistaken, was the appearance was by one of our own members, wherein this very point of Sai Publication Fund was argued and the advance ruling authorities stated otherwise. So that is where I am, what the point I am trying to drive through here is that the definition of business, if you see the first clause, any trade, commerce, manufacture, profession, vocation, adventure, wager, or any other similar activity. Please bear in mind, I am not trying to say that any charitable organization will not fall under the ambit of GST, considering the Supreme Court judgment in Sai Publication Fund. No, not at all. If a charitable organization is running a hospital, in that case, it cannot argue on the same lines, because where the primary object itself is considered to be running a hospital and providing services of healthcare. There can be an exemption, but under some other clause. The point I'm trying to make is spreading the message of Sai Baba or any other god, if you want to take, or any other guru, where that primary activity itself does not fall under any of these terminologies used: trade, commerce, manufacture, profession, vocation, adventure, wager. Any other similar activity has to be understood as that of similar to trade, commerce, manufacture, profession. So anything and everything is not covered. So where the intention and the primary object is to spread message of XYZ person or a god, that itself does not fall under this business clause. So where the primary object does not fall under the business clause, the ancillary activity that is being undertaken cannot fall under the definition of business. In that sense, the Supreme Court ratio in case of Sai Publication Fund is very much applicable till this day. Let us move ahead. The third part that we spoke about, consideration. The definition of supply states that it includes all forms of supply made for a consideration by a person in the course or furtherance of business. We have seen that a trust will fall under the definition of person. There are activities, the definition of business is wide enough to include any activity, whether or not it is undertaken for pecuniary benefit. Now, the next part is that it should be made for a consideration. What is consideration? Consideration includes any payment made or to be made, whether in money or otherwise, in respect of, in response to, or for the inducement of the supply of goods or services or both, whether by the recipient or by any other person. Again, the definition of consideration is also pretty wide. It covers consideration in money or in kind. It is, but the condition is that it should be in respect of, or in response to, or for the inducement of the supply of goods or services, or whether by the recipient or by any other person. So any person can pay. It is not necessary that only the recipient has to pay the consideration. Monetary value of any act or forbearance in respect of or in response to or for the inducement of the supply of goods or services, whether by the recipient or any other person. Consideration does not include any subsidy given by the central or the state government, and it also does not include deposits unless the supplier applies such deposit as a consideration. When it is applied, it is considered as consideration. The point that we are trying to understand here is, let us say that any XYZ activity is undertaken by a charitable trust. Now, where such activities are undertaken free of cost, by all means, there is no consideration, because consideration has to be in money or otherwise. Unless any other consideration in kind is proved, there can be no consideration. By this logic, can someone say that consideration is wide enough to include even donations received by the trust? And can you say that the trust has to levy GST and pay GST on the donations that it is receiving from any person or any donor? Now, the position of donations under GST, first and foremost, we must understand that donations are gratuitous payments. So once it is a gratuitous payment, it is not in consideration of, or for the inducement of, or in relation to any particular supply. Therefore, it cannot be said to be consideration for a supply. Therefore, donations generally are not liable to GST, unless and of course the trust is obligated to provide something in return to the donor. In this regard, the CBIC has issued circular number 116 dated 11th of October, where they say that where the name of the donor is displayed in the recipient institution in such a manner where it can be said to be an expression of gratitude and public recognition of donor's act of philanthropy, it is not aimed at giving any publicity to the donor in such manner that it helps him in advertising or promotion of his business, then yes, it can be said that there is no supply of service for a consideration. So for this, for donations to fall out of the definition of consideration, they say that there should be no quid pro quo, or there should be no obligation on part of the recipient, that is the trust, to do anything for the donor or to do anything on the instructions of the donor. Therefore, CBIC states that where all these three conditions are met, then only and only then GST is not leviable. First condition is that gift or donation is made to a charitable organization. Second condition, payment has the character of a gift or donation. And the third is purpose is philanthropic. That is, it does not lead to any commercial gain. After having considered the position of donations, let us sum up what we have discussed till now. We can say that if the trust is a person, whether it is a person, yes, it's a person. If the person, if the trust falls or the activities of the trust fall in the definition of business, and if there is consideration for the activities, that is the supply of goods or services. Please bear in mind, supply and goods and services have been defined. So once you talk about supply of goods or services, goods is any movable property, service is anything that is not goods is a service. So all the activities, unless there are, it falls under certain specific exemptions provided by the GST law, GST would be applicable to the activities undertaken by the charitable trust. Now, what is the criteria for claiming exemption from GST? Notification number 12 of 2017, central tax rate, dated 28th of June 2017, the first entry itself talks about charitable activities by an entity registered under section 12AA of the Income Tax Act. From this, what we can deduce is that there is a dual criteria set by the GST law for a charitable trust to claim exemption from the transactions that it is undertaking. Exemption from GST only I am talking about. First criteria, that the entity has to be registered under section 12AA of the Income Tax Act. We have already seen, Gautam Bhai has taken us through the provisions of the Income Tax Act. 12A, 12AA are not different sections. Now, from 1st of April 2021, 12AA has been made redundant and all those trusts are required to be registered under 12AB. Therefore, in my opinion, there is an amendment which will have to be made to this particular notification in order to replace this 12AA by 12AB. If this remains as 12AA and now the entities are registered under 12AB, they may still be able to claim their exemptions under income tax law. However, they will lose their exemption under GST law. So the first criteria is that the entity has to be registered under section 12AA of the Income Tax Act. Second criteria, that the activities that it is carrying out, they should specifically fall under the charitable activities as are defined in this notification number 12 of 2017. So paragraph 2R of notification number 12 of 2017 CT rate defines what is charitable activities, and just like Income Tax Act, where charitable activities have been defined, GST law for its own purposes, for the purposes of claiming exemption from GST, defines what are charitable activities. Only when the activities of a charitable trust fall under the purview of charitable activities, that trust can claim the exemption under this notification.
Aditya, just sorry to interrupt. Would you want to take questions when people are raising their hands now or later?
No, what we'll do is that we'll try and finish by, we have time till 6:15. We'll finish by 6 o'clock. Last 15 minutes, we'll take up the questions.
Okay. Yeah. Thank you. Request everyone to post their questions on the question answer box. So we can take it up at the end. Yeah. Thank you. Sorry, Aditya, for
no problem. Yeah. No problem. Okay. Now, for this, we need to see the definition of charitable activities and understand what activities fall under the definition of charitable activities. First part, activities relating to public health by way of care or counseling of terminally ill persons or persons with severe physical or mental disability. Next, care or counseling of persons afflicted with HIV or AIDS. Next, care or counseling of persons addicted to a dependence forming substance such as narcotics, drugs, or alcohol. We'll stop here. This is the first entry or the first clause. So what it says is activities relating to public health. All activities relating to public health do not fall as under charitable activities for this purpose. Activities relating to public health by way of care or counseling of terminally ill patients, persons afflicted with HIV or AIDS, persons addicted to dependence forming substance. Now, terminally ill persons or persons with severe physical or mental disability. Severe disability has not been defined in this notification anyway. However, there is a definition under the income tax law which provides what is severe disability, what is disability. So guidance can be taken from that particular enactment. Next, persons addicted to a dependence forming substance. As far as I am aware, even tea and coffee are dependence forming substances. People get addicted to coffee also. On a lighter note, in today's day and age, social media itself is a dependence forming substance, or mobile phones for that matter. Can you tomorrow start a charitable activity saying that I am taking care or counseling the persons who are addicted to coffee and claim exemption? The point I'm trying to make is that the definition of charitable activities, they have specifically defined it that persons addicted to a dependence forming substance such as narcotics, drugs, or alcohol. So it has to be restricted to only such dependence forming substances. Next, activities relating to public health by way of public awareness of preventive health, family planning, or prevention of HIV infection. Please note that they have specifically defined the activities which they consider to be charitable activities. Also note that there may be companies, so under the Companies Act, the CSR provisions are there. A lot of companies may be spending money on CSR activities by way of spending on programs which are for public awareness of preventive health or family planning. They may be given the benefit under the Companies Act for CSR purposes. However, what we have seen is for exemption under GST, there is a dual criteria. So that activity itself may fall under the definition of charitable activity. However, that company, since it is not registered under 12AA of the Income Tax Act, they cannot claim the GST benefit. Next, second clause, charitable activities, activities relating to advancement of religion, spirituality, or yoga. Now, this is kept open. There is nothing under this. We are in India. So, religion, spirituality, and yoga are very, very important to us. So, activities relating to advancement of religion, spirituality, or yoga, they are considered as charitable activities. Third clause, activities relating to advancement of educational programs or skill development relating to abandoned, orphaned, or homeless children, physically or mentally abused and traumatized persons, prisoners, and persons over the age of 65 years residing in rural area. So activities which are relating to advancement of educational programs or skill development relating to these persons only. Now, rural area has also been defined in this very notification. So please bear in mind, I have put it on this slide. This slide will be shared with all of you. So this can be of future use. However, the point I'm trying to make is that just because some activities are undertaken for the advancement of educational programs of senior citizens does not mean that it will fall under charitable activities. It has to be for senior citizens or persons over the age of 65 years residing in rural area. Rural area has also been defined. Last part of charitable activities, activities relating to preservation of environment, including watershed, forests, and wildlife. So this is the definition which is given in para 2 of notification number 12 of 2017 central tax rate. Let us move forward and see some examples of exemptions which are particular to these charitable activities, and before moving to some general exemptions also. Now, first coming to activities relating to advancement of religion, spirituality or yoga. CBIC has issued a circular number 66 dated 26th of September, where they have clarified certain aspects relating to activities relating to advancement of religion, spirituality, yoga. They have stated what is to be considered as exempt, what is to be considered as taxable. Under exempt category, they say fee or consideration charged in any form from the participants for participating in a religious, yoga or meditation program or camp, which is meant for advancement of religion, spirituality of yoga, such fees are exempt from GST because it falls under the ambit of charitable activities. There was also a question put to them as to where there are various camps where people go and stay. Those particular organizers also provide for their lodging and boarding, and such camps are held. In that case, whether those fees that are received would still be exempt under this particular clause, to which they say that residential programs or camps where the fee charged includes the cost of boarding and lodging is also going to be exempt, so long as the primary or the predominant activity, objective and purpose is advancement of religion, spirituality. So a concept of our composite supply also comes into picture. What they are basically saying is that where the primary or the dominant intention is to promote religion, spirituality or yoga, or where basically a yoga camp, a residential yoga camp is held, and where the dominant intention is that of yoga, then in that case, the fees that are charged for stay and food, they may also be included in the charitable activities. However, they say that if the charitable trust merely or primarily provide accommodation, or they serve food and drinks against the consideration in any form, including donation, then it will be taxable. So where the primary or dominant intention is not that of advancement of religion, spirituality or yoga, however, it is only an ancillary activity, and the primary activity or there primarily where you set up a yoga resort, where it's a luxury resort, yoga is done 1 or 2 hours in a day, otherwise it is all relax, have drinks, enjoy. In that case, you cannot say that it is promoting or it is advancement of religion, spirituality or yoga. Then whatever may be the form of consideration, they may be taking donations, they may be taking whatever, they will still be considered as a regular business activity liable to GST. Next, activities such as holding fitness camps or classes such as those in aerobics, dance, music, etc. are also not considered to be activities relating to advancement of religion, spirituality or yoga. They are considered to be taxable activities. Now, people like me will, it's a subjective matter. However, the legislature in its own wisdom can decide. For a person like me, music is meditative, it is spiritual. However, according to them, music is not spirituality. Music classes, if they are conducted, they will form part of regular business activity, not charitable activity. Let us move to another issue, another exemption. See, these tables that I'm sharing, these entry number 13 or so, these are all entries from notification number 12 of 2017, which is the exemption notification. So I have placed before you the text of what the exemption notification is saying, so that you can view it while we discuss particular specific exemption. Now we come to the activity of conducting any religious ceremony or renting of religious precincts. So there are charitable religious trusts which run temples, mosques, churches, and so on and so forth. Now, please bear in mind that entry number 1 specifically talks about charitable activities by an entity registered under section 12AA. We have already seen what charitable activities are. We have seen the examples of charitable activities also. Now, these particular exemption notification entries, unless they specifically talk about section 12AA, that twofold criteria does not apply to these entries. That twofold criteria of registration under 12AA and undertaking charitable activities only applies where you're seeking exemption under entry number 1. These entries are exclusive or mutually exclusive. So a person may not fall under entry 1. They may still fall under entry number 13 and claim exemption from GST. Now, conducting any religious ceremony. Religious ceremonies are life cycle rituals which are undertaken. So we are a very God-loving and God-fearing country. There are lots of religions which live harmoniously in India. So they say that religion can never be a business activity. Conducting any religious ceremony is out of ambit of GST by way of, it may fall under the definition of supply, but it has been specifically exempted. Okay. Next, services by a person. It only talks about a person. It can be any person. It can be a trust. It can be an individual. It can be a Section 8 company. It can be anybody. Services by a person by way of renting of precincts of a religious place meant for general public, owned or managed by an entity registered as a charitable or religious trust. Now, this second part, they are restricting to a specified category of persons. The first clause is applicable to any person. Second clause, clause B, is applicable that where that religious place meant for general public should be owned or managed by an entity registered as a charitable or religious trust under section 12AA, or a trust or institution registered under 1023C clause 5 or 1023 BBA. So let us not go into what exactly are covered in those. So where the entity is registered under these, only then, and that entity is managing or it owns that religious place which is meant for general public, then renting of precincts of such place is exempt from GST. In order to appreciate what they are giving exemption to, they have defined what a religious place means. Religious place means a place which is primarily meant for conduct of prayers or worship pertaining to a religion or meditation or spirituality. Okay, so for our understanding, we can consider that it can be a temple, it can be a gurudwara, it can be a church, it can be a mosque, it can be meditation centers, whatever it is. Okay, next, for general public, they say that religious place meant for general public. General public has also been defined in the notification. It means the body of people at large, sufficiently defined by some common quality of public or impersonal nature. If you have a private temple somewhere which you can lock and go away, and it is only available for use to you in your own house or in any other compound, and it is available for use to you or is only a specific sect of people, or only there is restriction for the general public to use that religious place, then it cannot be said to be a place meant for general public. So this exemption is only specific to religious places which are meant for general public. For example, our Mahalakshmi temple, okay, or Haji Ali Mosque, whatever you want to take. So renting of precincts of such a religious place meant for general public is exempt. Precincts has not been defined in this particular notification. The dictionary meaning of precincts will tell you that it is an area within the walls or perceived boundaries of a particular building or place, an enclosed or clearly defined area of ground around a cathedral, church, temple, etc. So we all know what a precinct can mean. It is within the boundaries of wall, boundaries of that particular place. So once we've understood what they are intending to exempt, they have also given a proviso that nothing contained in this entry B shall apply to renting of rooms. Now, there may be religious places which have your dharmshalas, where the rooms are given for on minimal charges for people to stay when they travel. So such renting of rooms is exempt from GST. However, the renting of rooms, the charges should not exceed rupees 1,000 or more per day. What they are intending to cover, or what they are trying to exclude from this, is that only such activities which are genuinely of charitable nature will be covered by these exemption notifications. So renting of premises or community halls or kalyan mandapam or open areas, there are maybe many temples which have a large hall or an open area which may be given for certain ceremonies, even for marriages. Now, if they charge 10,000 rupees or more per day, they cannot claim this exemption. They are doing a business activity. Where shops are rented, we see that outside many temples, the shops are there, so they may take rent. The charitable trust may take rent from these shops. Where such rent exceeds 10,000 rupees or more per month, they will not be able to apply for GST exemption under this notification. Let us move ahead. Another important part or activity undertaken by charitable organizations are healthcare services. There are charitable hospitals that are run. So if we see the charitable activities, okay, we quickly go back. The first part says that activities relating to public health by way of care or counseling of terminally ill persons or persons afflicted with HIV, we already saw that it is very specific. So where a charitable trust is running a hospital providing services for all kinds of diseases, it may not necessarily fall under activities relating to public health by way of care or counseling of these. So it may not fall under charitable activities. However, when we see entry number 74 to notification number 12, it talks about services by way of healthcare services by a clinical establishment, an authorized medical practitioner or paramedics. Second clause is services by way of transportation of patient in an ambulance other than those specified in A above. So there may be charitable trusts or charitable organizations which may not be running a hospital, but they may people may have given them donations. They may be owning an ambulance or many ambulances, and they may be providing the services of transportation of patients who are in need to hospitals, to and from hospitals. Can they be said to be carrying on healthcare services? Yes, under clause B, they can be said that services by way of transportation, they may fall under this exemption. Now, healthcare services have been defined in this notification. Healthcare services means any service by way of diagnosis or treatment or care for illness, injury, deformity, abnormality, or pregnancy in any recognized system of medicines in India, allopathy, homeopathy, Ayurveda, and includes services by way of transportation of the patient to and from a clinical establishment, but does not include hair transplant or cosmetic or plastic surgery, except when undertaken to restore or reconstruct anatomy or functions of the body affected due to congenital defects, developmental abnormalities, injury, or trauma. What they are trying to say is that if you have been a part of an accident, your body is burned, or whatever it is, which requires your survival is dependent on a plastic surgery, or it is required for you to carry on your day-to-day activities, in that case, it will be considered as a healthcare service. However, a nose job is not going to be considered as a healthcare service. Okay, they should be provided by a clinical establishment. Clinical establishment means a hospital, nursing home, clinic, sanatorium, any other institution by whatever name called that offers services or facilities requiring diagnosis or treatment or care for illness, injury, deformity, abnormality, or pregnancy in any recognized system of medicines, or a place established as an independent entity or a part of an establishment to carry out diagnostic or investigative services of diseases. So your investigative or diagnostic labs are also part of clinical establishment. They are also providing healthcare services, and therefore all such entities fall under healthcare services by clinical establishment, and GST is not leviable. What we can take from this slide is healthcare services which are provided by, since we are only restricting our discussion to charitable trusts, we are considering charitable hospitals. Okay, charitable hospitals, as Gautam Bhai also mentioned, there are norms which they have to satisfy. They have to have a certain number of beds reserved for charitable purposes, for the patients who are in need. Charitable hospitals usually provide treatment to such people at a very minimum cost. The doctors do not charge their own fees, so on and so forth. So the entire purpose is charitable. In that case, even if it does not fall under entry number 1, and it may not fall under charitable activities, still they will not be liable to pay GST on those services, because they are providing healthcare services. Since they are hospitals, they fall under the definition of clinical establishment, and they should also fall under healthcare services. Let us move ahead. Similar to your medical services or health services, there is services by rehabilitation professionals as at rehabilitation centers established by charitable trusts. Now, 74A entry talks about rehabilitation professionals recognized under the Rehabilitation Council of India Act. Section 3 of this Rehabilitation Council of India Act specifies what a rehabilitation professional means. It means your audiologist or speech therapist or clinical psychologists. So please bear in mind, there are charitable hospitals which employ, most of the hospitals nowadays employ clinical psychologists also. Now, clinical psychologists may not be doctors. However, they are rehabilitation professionals. So they are also covered here. And when services are provided by such rehabilitation professionals, that at an establishment or rehabilitation center which is established by the central government or state government or an entity registered under 12AA of the Income Tax Act. Again, they have restricted this. So services provided by rehabilitation professionals at rehabilitation centers or educational institutions or medical establishments which are established by the central government, state government, or an entity which is registered under 12AA of the Income Tax Act, only such services are exempt from GST. Another large aspect of activities undertaken by charitable trusts or charitable organizations are educational institutions. Educational institutions, charitable organizations may have schools, colleges, or certain institutions which provide vocational training also. Now, entry number 66 of this notification states that services provided by an educational institution to its students, faculty, and staff. Now, this means that all the services which are provided by an educational institution to its students, faculty, and staff are exempt from GST. For this purpose, the organization that is providing these services should fall under the definition of educational institution. Educational institution has been defined to mean an institution providing services by way of preschool education and education up to higher secondary school or equivalent. Next, education as a part of a curriculum for obtaining a qualification recognized by the law, by any law for the time being in force. And third part is education as a part of an approved vocational education course. So any institution that is providing educational services which fall under these categories can be considered as an educational institution. Once it falls under the definition of an educational institution, whether it is run by a charitable trust or any other entity, the services that are provided by an educational institution to its students, faculty, and staff are all exempt. Next, services provided by an educational institution by way of conduct of entrance examination against consideration in the form of entrance fee. Once an educational institution is covered by the definition of educational institution, then any fees that they take, see, when they take entrance fees for conducting an entrance exam, those people whom they are taking money from are not its students. So it will not fall under this clause. Therefore, this clause has been entered. Entrance fees that are taken will also not be liable to GST. The third part covers services that are provided by other people to an educational institution by way of transportation of students, faculty, and staff, catering, security or cleaning or housekeeping services, services relating to admission to or conduct of examination by such institutions, and supply of online educational journals. So, clause number 1, 2, and 3, please bear in mind, applies only to an educational institution which is providing preschool education and education up to higher secondary. So transportation of students, so any person which provides services of transportation of students to a school up to higher secondary or its equivalent can claim this exemption. Any person who is catering or providing security or cleaning housekeeping services to a college, although that college may fall under the definition of educational institution, they cannot claim this exemption because the first three clauses are only applicable to a very specific category. Similarly, clause number 5, this clause does not apply to preschool and higher secondary. They say that supply of online educational journals and periodicals is not, when it is provided to this category of educational institution, we will not grant you exemption. Where it is for other two categories, yes, you can claim exemption. Well, you should also note that services relating to admission to or conduct of examination by such institution nowadays, see, during the COVID times, even colleges and schools have conducted their admission process online. There are service providers who have provided the entire portal to a particular college where the students get to log in, fill up their forms, appear for their exams, so on and so forth. So such services provided to an educational institution are exempt from GST under this notification. And there is no caveat as to which kind of educational institution it is, so long as the institution falls under the definition of educational institution. We now come to certain other notable exemptions. These have been chosen based on the criteria that these are the kind of activities that a charitable trust can undertake, or these are normally undertaken by charitable trusts. So first is an old age home, which is run by the central or state government or by an entity registered under 12AA. Again, they have specified that that old age home must be run by an entity which is registered under 12AA, and they should be providing services to residents who are aged 60 years or more. And the consideration, including amount charged for lodging, boarding, and maintenance of such persons, should not exceed 25,000 rupees per month per member. Then they can claim exemption from GST. Next, services of public libraries by way of lending books, publications, or any other knowledge sharing or knowledge enhancing content or material. Services by a specified organization in respect of religious pilgrimage facilitated. So these organizations are specified. Usually they are charitable trusts which are providing such services. They are also covered. Services by way of public conveniences such as provision of facilities of bathroom, washroom, lavatories, urinals, toilets. So such services are also exempt from GST. Service by an unincorporated body or a non-profit entity registered under any law for the time being in force to its own members by way of reimbursement of charges or share of contribution as a trade union, or for providing or carrying out any activity which is exempt. The third clause, we are all aware, it's a separate topic for a seminar, not today's topic. It's a residential RWA or a housing society. We have the Madras High Court judgment in that Greenwood case also. So that is not the topic of discussion today. This is where whether or not it's a charitable trust. However, when it's a non-profit entity, the money that it is charging to its own members as share of contribution or as reimbursement of charges, then in that case, up to that particular amount, they have stated that it is exempt as per the Madras High Court judgment, where even if it is exceeds, the entire amount is not liable to GST, only the differential amount is liable to GST. Again, not the discussion for today. Moving ahead. Again, services provided by a non-profit entity or an unincorporated body registered under any law for the time being force, engaged in activities relating to welfare of industrial or agricultural labor or farmers, or for promotion of trade. So wherever a non-profit entity has been established, it is registered under any law. It does not necessarily mean that it has to be registered under 12AA of the Income Tax Act only. Any non-profit entity registered under any law which is engaged in promotion of trade, commerce, industry, agriculture, art. Take for example NCPA. It is engaged in the promotion of art and culture. Okay, there may be many such examples of entities which are engaged in promotion of sports, with education, social welfare, charitable activities, may or may not be registered under 12AA, where such entities are charging its own members as membership fee up to an amount of 1,000 rupees per member per year. It is exempt from GST. Again, the same argument of up to an amount of 1,000 will come into picture. Let's not go into it. The notification states that where the amount is still up to 1,000, it is entirely exempt from GST. Services by way of training or coaching in recreational activities relating to arts or culture or sports by charitable entities registered under section 12AA. Again, it is very specific to entities which are registered under 12AA of the Income Tax Act. These were certain exemptions under the CGST notification number 12 of 2017 central tax, which I wanted to highlight relating to charitable organization. All such exemptions are also covered by notification number 9 of 2017. However, there is one additional exemption under IGST provided by entry 10 of notification number 9, which states that services received, so import of services from a person which is located in a non-taxable territories. So import of services by an entity which is registered under section 12AA of the Income Tax Act for the purposes of providing charitable activities is exempt from tax. So just like what they have stated is that if you are providing services which are considered as charitable activities, we will not levy GST on it. They are exempt from tax. We are all aware that on import of services, a person has to pay tax under reverse charge and then claim input tax credit if eligible. So for the purposes of reverse charge, this exemption will help such organizations to not pay any reverse charge, because by this very notification, entry number 10, it has been exempted. So import of services by a specific category of importer, that is by entity registered under 12AA for the purposes of providing charitable activities, that definition will come into picture again, is exempt. They have also stated that this exemption does not apply to OIDAR services or ocean freight services. So where even if it is an entity registered under 12AA of the Income Tax Act and it is taking services of online information database access and retrieval services from a provider of service located outside India, or ocean freight services for import of goods, in that case, it will not be able to apply this particular entry number 10 of exemption notification. They will have to pay tax under reverse charge. CBIC has issued a circular. I am referring to now hostel accommodation services. There are many charitable trusts which run hostels for students or for working professionals, whatever it is. Now, CBIC has stated that hostel accommodation services do not fall within the ambit of charitable activities as defined in para 2R. However, they say that services by a hotel in guest house, so there is a specific entry for provision of services by hotel or accommodation services. In that entry itself, it is stated that where the charges are 1,000 rupees for a particular declared tariff of a unit of accommodation is below 1,000 rupees per day or equivalent, that is exempt. So they say that hostels are at par with any hotel or inn or a guest house or club. So where they are charging less than 1,000 rupees per day per room, where the declared tariff is less than 1,000 rupees, then even they can claim exemption in that particular entry. However, they will not be able to claim exemption as charitable activities. Next, after seeing the exemptions that are provided for, let us come to certain particular aspects which I would like to highlight about charitable organizations. Now, taxability of supply is made free of cost. A lot of charitable organizations, philanthropic activities, they will give away goods or provide services and they will not charge any consideration because it's a charitable activity. So normally supplies of goods or services or both made without consideration will not be liable to tax, because as we've seen at the beginning of this session, the definition of supply itself states that it should be for a consideration. Where there is no consideration, it will not be leviable to GST. However, where such supplies fall under Schedule 1 of the Act, there is a Schedule 1 which states that activities falling under Schedule 1, whether or not they are, so even if they are made without consideration, they are to be treated as they are deemed supplies. So one must bear in mind that I have given two examples: permanent transfer or disposal of business asset by a charitable trust, where input tax credit was availed on such assets, that will be deemed to be a supply even if it is made without consideration. Then supply of goods or services or both made to a related person or to a distinct person as specified in section 25 of the Act, that particular supply of goods or services will also be considered as supply irrespective of whether you have charged consideration for it or not. So any services that are provided to a sister concern will fall under the ambit of GST because it is falling under the Schedule 1 and it will form part of supply. Now, whether a particular exemption is applicable to it or not will have to be seen separately. What is the impact on input tax credit? Charitable trust, let us say, take a case where they are providing goods and services. A part of it is falling under exemption. A part of it they are paying GST on it. So their turnover, outward turnover includes taxable as well as exempt supplies. So we will have to, section 17(2) will be applicable, where there are common inputs. You will have to apply the provisions of Rule 42 and Rule 43 and proportionately reverse the ITC. You will have to take ITC only that is applicable to the taxable supplies, and ITC relating to exempt supplies you will not be able to claim. At this point, I must make everyone aware that RCM under section 9394 or 53 and 54 of the IGST Act is very much applicable to charitable organizations. So there is no specific exemption. We have seen the exemptions. There is no specific exemption provided to any person who is providing any services or goods to a charitable organization. So just because you are a charitable organization does not mean that any person who is supplying goods or services to you will not charge tax. They will charge tax to you. And similarly, where the inward supplies are falling under section 9(3), that means they are liable to tax under reverse charge. The charitable trust is very much liable to pay tax under reverse charge at the rate that is specified on those goods or services. Now, whether they can claim the input tax credit of such goods or services or not shall depend whether their output services are liable to GST or not, or if they are common inputs or input services, Rule 42 will be applicable. Next, we come to registration requirements. Now, if a charitable trust is exclusively supplying goods, in that case, let's say that there was an advance ruling also. Let's take that up. There is some Nagri Eye research. It is not covered in this presentation, but it is there. So they had applied to the advance ruling authority seeking clarification on that whether the activities they were running a medical store in which they are supplying medicines at cost. They say that we are not earning any profit. We are supplying medicines to the needy. We only recover our cost. We do not charge anything above the cost. And therefore, since we are a charitable trust registered under 12AA, we are running a shop like this. Whether we are liable to charge GST on the supply of goods, that is medicines. The advance ruling authority held that yes, you are a person, you are in business under GST, you are charging consideration. Now, if you are charging cost, you will levy GST on cost. If you are charging a higher amount, then you will pay GST on the higher amount. There is a concept of transaction value under section 15 of the GST Act. If there is no other consideration and the parties are not related, then whatever amount is charged by that particular shop store is deemed to be transaction value. So they will pay tax on the transaction value. Now, such trusts or such organizations which are exclusively dealing in supply of goods, the limit of 40 lakhs will apply to them and 20 lakh in case of special category states. If they are providing goods as well as services, then 20 lakh limit will apply to them. So 20 lakh and 40 lakh is aggregate turnover. Now, aggregate turnover, the definition includes taxable as well as exempt supplies of goods or services or both, including supplies that are not leviable to GST. So please bear in mind that if certain services are exempt by virtue of notification under section 11, by virtue of notification number 12, it still forms part of your aggregate turnover. For that matter, there have been advance rulings in which questions have been asked as to whether the interest earned on fixed deposits that are kept by a particular person, now by way of a specific exemption entry, interest earned on deposits has been exempted from GST. However, the advance ruling authorities have stated that they are very much part of your aggregate turnover because they are exempt supplies. So it's a service being provided for which you are earning consideration in the form of interest, and therefore it is an exempt supply of service which should be included in your aggregate turnover. Sale of those commodities which are not leviable to GST as of today, petrol, diesel, alcohol, so on and so forth, are also part of your aggregate turnover. Therefore, when you see the aggregate turnover, all these things have to be considered and then calculate the aggregate turnover. That being said, provisions of section 23 will be applicable to you, which state that any person, so if you consider everything and if your turnover is exceeding 20 lakh rupees, however, all the activities that you are doing are falling under one or the other exemption entry, so your entire turnover is exempt from tax. Then section 23 states that if you are engaged exclusively in the business of supplying goods or services or both that are wholly exempt from tax, you are not liable to registration, so you may not obtain registration. At the same time, provisions of section 24 also apply. So if a trust has provided, the turnover may not exceed 20 lakh, but they may, if they have provided services or supplied goods or services in the course of interstate trade or commerce, in that case, they are compulsorily liable to be registered, even if their turnover has not exceeded 20 lakh. Similarly, if they have received any services which are falling under section 9(3), they will be compelled to obtain registration and pay tax under reverse charge. So these things have to be kept in mind even for charitable trusts. I now come to the last part of this discussion as to notable advance rulings and appellate advance rulings. Now, this part was supposed to be covered by Aditya. I am going to do my best to do justice to it. The screen will show you the questions that were put forth before the advance ruling authority. So in this first case, Shrimad Rajchandra Adhyatmik Satsang Sadhana Kendra, this is the one I was referring to. The brief facts of this case are that this is a charitable organization registered under 12AA of the Income Tax Act. their primary objective is to spread the knowledge of a certain Adhyatmic Guru and the Jain Dharma. Okay, so that is their primary objective. Now, in order to attain this primary objective, they are also printing certain materials which are teaching the teachings of that particular religion, and they are supplying it at a minimum cost just to recover their cost. So the facts in this case are quite similar to what was there in Sai Publication Fund. For that matter, while arguing this particular matter, this went up to appellate authority for advance ruling. I don't know whether this has gone to High Court level, because Maharashtra AR as well as appellate AR confirmed the ruling of the advance ruling authority, wherein the advance ruling authority stated nothing doing. That is a judgment under another law. Over here, the definition is clear. It is everything is business, whether it is for pecuniary benefit or not. And therefore, even sale of publication or whatever it is doing, other activities, ancillary activities are also business, and therefore GST is liable. What they are doing is they are supplying goods or services. This is advance ruling number 1. Second one was Acharya Shri Mahashraman Chaturmas Pravas Vyavastha Samiti Trust, Karnataka Advance Ruling Authority. Now, over here, a lot of questions have been asked. What they were basically doing is that they are constructing buildings for residential purposes, and they are renting them out for temporary residential purposes to devotees, and renting of space for shops and stalls, and then all construction activities being undertaken and all of that. So their question was whether we are in business, whether we are charitable activity, so we need not register, whether we should pay GST or not. Now, as far as I remember, having read this, they have stated this very thing, that if you are falling under these particular categories, now renting of rooms, they have provided a 1,000 rupee limit. If these people are charging more than 1,000 rupees, they are saying we do not consider you to be a charitable purpose. So you will not be able to claim the exemption. The last question that they had sought clarification to was whether they are acting as an intermediary for booking hotel rooms for the pilgrims. So in that case, they stated, the advance ruling authority stated that if you are falling under the definition of pure agents, in that case, any which way you will not be liable to pay GST. However, if you do not fall under the definition of pure agent, you are charging anything over and above, and it is not being segregated. So basically what they are stating is that where the conditions of pure agency are not satisfied, you will have to pay tax at 18%. Next, Terna Public Charitable Trust. Now this, the facts are have already been discussed in the previous session, where I'm sorry, yes, Terna Public Charitable Trust, where sir discussed that there are hospitals which also have your medical stores. Now they supply medicines, they supply surgical items to inpatients and outpatients. Now the question raised here is not relating to charitable activities. However, this is relating to healthcare services, but the applicant is a charitable trust run hospital, and in that hospital they have a medical store. So on those same lines, what sir discussed earlier, that they, by all means, it's a charitable activity. They are allowed to undertake that business. Their primary object is that of charitable activities. This is only an ancillary activity. However, for GST purposes, this particular activity is not covered by the definition of charitable activities. That being said, healthcare services provided by clinical establishments is exempt. So in this advance ruling, what was stated was that the surgical items that are provided to inpatients, that falls under the definition of composite supply. So where the primary intention is healthcare treatment, and supply of medicines or surgical items, that is goods, is only ancillary, and there it is naturally bundled in the ordinary course of business, and therefore the primary dominant intention or the principal supply is that of healthcare services, and therefore it falls under the exemption provided for healthcare service. The medicines or surgical items that are sold to outpatients is very much liable to GST, and they should pay GST on it, because that is not part of healthcare services, that is sale of goods, sale of medicines. This is a very interesting advance ruling. Ecosan Services Foundation, again, this is a charitable trust which is providing sanitation and other services to a lot of entities, including NGOs or non-profit organizations. So if you give me a minute, I will, this advance ruling is worth going through. Is my screen still visible to everyone? Umang?
Yes, yes.
Okay.
I can see
So-
Ecosense. Yeah. We can see it.
Okay. So now in this case, what had happened, that
Are you opening
the applicant, the non-profit organization.
Are you opening the?
I'm sorry.
Are you opening the
No,
AR
no.
here or-
No.
Yeah. On
No, I'm
another
not.
PC.
I'm not opening.
Yeah.
I am not opening the AR. I have opened it on another screen, and I am
Yeah.
going
No worries.
through
No
it.
worries. Yeah.
Just
Got it.
briefing everyone. Okay. The applicant in this case is a non-profit organization established in 2006, registered under the GST Act, is also registered under 12AA. So what services they are providing, which they are claiming to be charitable activities, under the definition that is provided under section notification 12 of charitable activities: sanitation capacity building through training, piloting and demonstration, awareness raising, R&D and coaching new enterprises, open dissemination of knowledge in sustainable sanitation and water management among individuals and institutions, providing sustainable solutions at community level, survey, research and analysis in the field of natural waste water treatment technologies. In order to render these services, amounts are received from various companies as well as persons as grants or donations. Now, on these facts, the appellant sought advance ruling as to whether the services provided to non-profit organizations which are registered as trusts under 12AA amounts to provision of service and any grant or donation received by it for performing these specific services towards preservation of environment, whether it amounts to provision of service and it is liable to GST. Now, in this, a very nice discussion of that last clause of charitable activities, which talks about your preservation of nature, watershed. So that is undertaken. That is why I'm highlighting this particular advance ruling. The advance ruling authority stated that the services provided by the applicant, which is an entity registered under 12AA, to various entities, including NGOs registered as trusts, is covered by the exemption notification entry at serial number 1, because the activities fall under the purview of charitable activities. Now, the last advance ruling I am taking up before stopping to take questions is of Dream Runners Foundation, which is of Tamil Nadu AR. They had sought questions, clarification on questions of whether the conduct of a marathon event, that they are also a trust, charitable trust. So they are conducting marathon event through which donations are raised for charity. So whether conducting such marathon event and the donations they are receiving, whether it is liable to GST, when the trust is approved under section 12AA, which means that the service of the trust is charitable in nature, does it not automatically become a charitable activity that is exempted under GST? So these were the questions that they had sought an advance ruling on. The answer to the second question, in my opinion, we have discussed at length, that merely because a trust is registered under 12AA and its activities may fall as charitable activities under Income Tax Act, does not automatically mean that they are charitable activities exempt under GST. They have to fall under the limited definition of charitable activities under GST law. In this case, the advance ruling authority stated that, just give me a minute, I'm sorry. Okay, Dream Runners Foundation, they stated that conduct of marathon event for participants by the trust is not a charitable activity, and therefore it is not an exempt supply. Where applicant is supplying taxable supply of service such as organizing marathon, etc., and it has aggregate turnover in the financial year which exceeds 20 lakh rupees, the applicant is required to obtain registration. There is no question of automatic exemption. So, I'm sorry, there were two more questions. So I think I've answered these also. With this, I wish to thank once again on my behalf as well as on behalf of CA Aditya Seema Pradeep for giving us an opportunity to present our thoughts. I have 15 minutes to take up the questions. Uma?
Yeah, thank you, Aditya, for such a nice presentation. We have couple of raised hands. I'll ask them to unmute. We have Mr. Shantilal Patel. Sir, can you unmute yourself? Yeah, hello. So, sir, you are unmuted, but we can't hear you. Okay, I'll. There is Miss Varsha is there. She has raised her hand. I'll allow her to talk. Yes, ma'am. You can unmute yourself. I think they are unable to unmute
They have not
themselves.
put their questions in the chat box.
No, they have just raised their hands. So they had raised it at the start, almost when you were just briefing on the GST applicability and supply part. So I believe their question is from there, but since they have not written it on the chat, I cannot.
So if my dear friend Aditya permits me, I would like to have his view on something.
Yeah,
Yes,
Parth,
yes.
just before
You can ask
say
the
something-
question and you can answer it also.
Yeah. No, but Parth, just wait for a moment. Umang, you have shared earlier the PPT of Gautam Shah, but it seems that the sharing is of the earlier PPT, what he might have presented elsewhere, and not this PPT. Today, what he presented.
No, he's whatever PPT he shared with us, I
But
shared.
you
It
check
is
up,
the
it's
same
not
PPT.
it's dated April 21, which he might have prepared for some other webinar. So yes, you check up at your end and you can resend it.
Yeah, I will resend
Yeah,
it.
please. Yeah, Parth, go ahead,
Parth,
please.
Yeah.
Parth.
See, Aditya, I would like you to kind of elaborate on that because it's a very interesting aspect that you brought in. When you say that, when you were initially talking about, whether a charitable hospital has to be registered, and quite correctly so. I mean, they fall under an exemption, that is fine, but quite correctly so, they have to be registered. But now if we look at, say, because you were trying to make out a difference between the kind of activities. Now, whether a religious activity, so to speak, can you bring the religious activity on the same lines as medical activity, because both of them come under the exemption notification.
So what you are saying is that the definition of charitable activities that they have given.
Yes. And the GST exemption notification also covers religious services, and it also covers healthcare services.
Yes.
Now, I think section 23 or something, there is a exemption for them to get registered. But we are talking about whether they are.
If they say that if you are in the business which is exclusively of supplying services which are exempt from GST, so that is what I stated, that your activities may fall under, some activities may fall under charitable activities, some activities may fall under some other entry of the exemption notification. However, where all of your activities are falling under one or the other exemption notification, your entire turnover is that of exempt services, then they say that you need not obtain registration at all.
No. What I want to say is, when you look at activity, manufacture, trade, vocation, whether a simple, say, take for example, a mandir or a derasar or a mosque or a church, whether that activity falls under the activities as it has been perceived in the definition of business in 270.
So what you are saying is, in order to fall under exemption, first it has to be a supply. So I think the question that you are raising is where it does not fall under the definition of business itself. Can it be said to be a supply in the first place? अगर supply ही नहीं है, तो exemption का तो सवाल ही पैदा नहीं होता.
Correct. And furthermore,
am I understanding
what I
that
want to say
question?
is, how can you say that whether that activity is business or not? I mean, I want your views on that. I mean,
okay. Now, for that we go back to the
Aditya,
Yes,
shall I try to answer this and then
yes,
you
by all
add
means,
on
sir,
to
if you
mine?
are there. Yes.
Yeah, because
Happy to have
Parth,
you on.
Parth has raised a peculiar issue. So first of all, from the your talk as well as my reading of the GST law, it seems that all the charitable activity means religious, medical, healthcare, etc. Correct? So when the notification gives exemption to a particular, say, religious, it will not cover medical. If it is something education, it will not cover religion. If it is something healthcare, it will cover healthcare, and that is what's specified and discussed by Aditya. So that means, apart your primary question, that trust carrying on, say, some particular activity, whether all exempt charitable, answer is no, because Aditya has already made clear that everything is not exempt, only specific is exempt under the GST law. First. Second point, what Parth you are trying to ask and discuss is about the business. So whether primarily in a business, then only a business and covered under GST law, or as Gautam Bhai and Aditya both said, that primary intention is charitable. But as the trust law as well as income tax law also permits some incidental business to which is in line with the charitable object attaining. And they gave example also of, say, medical store in a hospital and all and so on. So, or say a bookstore in a college, and or say hostel in a college and so on. So if this particular incidental business is carried on by the charitable trust, it is permitted under charitable law as well as income tax law. But mind well, as threadbare discussed by Aditya, if this itself is a business, then everything follows under the GST law. See, under the GST law, it is not said primarily you should be in business and then only. Even incidental business to the charitable object is a business under the GST law.
No, sir, but
I hope
incidental has always been a business. Sir, incidental activities has always been a definition of business in various forms, right from GST Act, VAT and everything. What I was trying to say is that can you still probably take that argument saying that if I am doing I understand that if you are doing exemption, today there is exemption, tomorrow there may not be exemption. So if you are doing certain exemptions, and if you are allowed to not take registration, that does not mean that you are outside the ambit of GST. You agree with me?
Yeah.
You are just right now outside the ambit of paying GST. That's all. What I'm trying to say is that can the argument that for it to be a business, say for example, a religious activity, now will somebody, whether it is a charitable trust or an association or whatever, if they are just doing religious activities, even though there is an exemption for such activities, will that be a business or a supply in the first case?
Sir, I will
Acha. Yeah.
I will
Yeah,
sum,
please go ahead, Aditya.
I will
Go ahead.
sum up also what
Yeah, yeah,
Parth,
good.
the point that Parth is trying to make here. See, what is, let's take it with specific discussion, in the sense that charitable activities definition given under notification number 12 states activities relating to advancement of religion, spirituality or yoga. What I think I understand Parth is trying to say is that, okay, exemption notification has been provided. Let us say that there is a charitable trust conducting whatever activities for relating to advancement of a particular religion. In my opinion, what he's trying to state were the similar facts that were put forth in that Srimad Rajchandra's advanced ruling of Maharashtra, that they are, the charitable trust is undertaking activities of promotion of religion. Now, ठीक है, आप लोग बोलते हो कि there is a specific exemption. However, exemption is for supply. For it to be a supply, it has to be a business activity, because definition of supply itself is business. And if you see the definition of business, the first part says any trade, commerce, manufacture, profession, vocation, adventure, wager or any other similar activity to trade, commerce, manufacture, profession, vocation. So where a trust is undertaking promotion of a particular religion, it is neither trade nor commerce nor manufacture. It is not even an adventure. Okay. A charitable clinic can also still be considered as, okay, it is not trade, commerce, manufacture. It is still an adventure. What he is trying to say. And that is where I think he will conclude. And I had stated that it is also my opinion that in particular circumstances, the Supreme Court ratio in Sai Publication Fund, again, where the facts were entirely similar, where when my object is promotion of a particular religion or a particular deity or god, that does not, it is not even an adventure, it cannot fall under the first clause of business itself. So uske baad mein whatever ancillary, because the definition clearly states any activity or transaction in connection with or incidental or ancillary to above, clause A above. So when it does not fall under, my primary objective itself does not fall under clause A, automatically any ancillary activity which is ancillary to that primary activity falls out of ambit of business. So what he is trying to say is वो business में ही नहीं आता है, exemption दूर का बात. Is that correct, Parth?
I was not trying to say, I wanted you to elaborate, but you're quite right.
Yes.
This is what, sir, but
this is my opinion. Yes, in particular specific facts and circumstances, this argument can very much be made and should be made and will be made.
And the argument is very pertinent because Deepak sir and Aditya, if you remember, that very initially in 2017, I think July or August or September, they had to come out with a circular. I don't remember the circular right now. They had to come out with a circular wherein they said that, you know, if a housewife sells the
jewelry, reverse charge circular,
the jewelry, it is not in the course of furtherance of business, so they don't have to get registered. Now, why can't the same logic apply here?
Okay. So let us not, because then we will only discuss one point. Let us leave it at that. That because what we are discussing is very similar to Sai Publication Fund and even that advanced ruling in which that particular Supreme Court judgment was quoted. So that, in my opinion, in particular facts and circumstances, that judgment still is very much applicable. And I think we have in our that book of key rulings under indirect tax laws also we had covered that Madras court in which that was covered.
So Aditya, do you agree or do you confirm the view that in your view, even Sai Publication today and considering the definition of business under BST as well as the GST law the same, then
Yes.
you say that Sai Publication today applies?
Yes. The ratio of Sai Publication Fund, in my opinion, applies even today.
Anyway,
Yes.
good development if it happens.
Because sir, the point is,
It will have to be argued, and I think it was CB sir. CB sir has argued that advance ruling, if I am not mistaken, and he has argued on.
And I think that matter is now before the Bombay High Court.
So that
maybe
is what I
appeal
said.
also,
I am not
or writ
aware.
petition.
No, I am not aware. I will have to check the status of what the matter is. But as far as I know, I see the facts. He must have approached the Bombay High Court because it is very clear.
Okay.
Can we take the other question now?
Yes, I think Sujoy Mehta has raised his hand. Sujoy, please go ahead.
Hi. The question is into two parts. One is, one of our charitable hospital has received something called as conducting fees, which is liable to GST. They have received conducting fees for 5 years in advance. Okay, so the question is into and conducting fees is something which is not fixed. So an amount is given, say X amount, and per month an invoice will be raised by the hospital depending upon the sale of the pharmacy. So conducting fees has been given by a pharmacy to the hospital. So my question is that is GST liable to pay on advance? And second question is, when will the person who is giving the conducting fee will get the ITC benefit?
Okay, if I may ask, what is the for what are these conducting fees being paid by the medical shop to the hospital?
Yes, so the conducting fees is paid by the pharmacy, which is a third party outsource, say for example, like a Noble. Yeah, it is a third party thing, so it is liable to GST. That's fine. And
no, so it is for use. It is for use of its place.
It is for
and infrastructure.
Yes, so I'll just elaborate that. It is for use of the place plus profit sharing.
Acha, plus profit sharing is there.
Yes. So if the pharmacy does X amount of turnover, the hospital will get X percentage plus the compensation for the particular month.
Okay. So, now I will give you my argument, which is what even the department is going to argue, that see, the nature of receipts are for the use of place and use of infrastructure. Okay, so it is nothing but rent, if you say. Now the methodology of calculation of this rent is, let's say, a fixed amount plus percentage of profits. The department will say the methodology can be anything. Once it is determined, the nature of the supply is supply of service, of renting out of premises, for which the hospital is earning that particular rent, which is calculated in a particular methodology. This supply of service, that pharmacy is paying X amount as a lump sum, which you are yourself saying that it is given in advance.
Yes.
Now, for supply of services, even when they are received in advance, the person is liable to collect GST and pay it to the government.
Yeah.
Even if he does not collect, he will have to pay it to the government. As and when invoices are raised. Correct. So what is happening, as I am understanding from this short discussion and limited understanding, is that the hospital has given it on rent. They have a formula for calculation. A part of it is known. Okay, a part of it is fixed. Now, a part of it will only be known when the business is actually conducted.
Yes.
Now, because the hospital is in a position to demand, they have stated that you will pay an X amount in advance to us. Baki ka baad mein calculate karenge, as and when your financial year ends or whatever it is, you determine the percentage and then raise a bill. We will raise an invoice. Correct?
Yeah. Yes.
Now, when in my opinion, the advance will be liable to GST. As and when the invoices are raised, that advance will be adjusted. And so advance receipt vouchers will be issued for advance. Against a receipt voucher, you cannot claim ITC. Only when a tax invoice is issued, then the pharmacy in this case will be able to claim the input tax credit. This is my argument, which will also be the argument of the department.
Right.
Does Deepak sir or Dhaval Bhai or any other person here has any other opinion on this? Please share, sir.
No, I agree to you, Aditya. Supply will be definitely taxable advances for the services. But about ITC, I missed
Yes,
your
sir.
wordings. ITC will be not available based on advances. It should
No,
have a
it will
tax
not.
invoice.
Yes, yes,
So I think so. No ITC till he receives, till he gives the services, and
correct,
till he gives the tax invoice or the
correct,
rather the hospital. Yeah.
correct.
Please go ahead. Yeah, go ahead.
Okay.
Yes,
Okay, thanks.
yes. Thank you, Sujoy.
Yeah, now we have Mr. Kirit, who has raised a question. Charitable trusts are registered under 12AA, need to be registered under GST. However, they are still not registered. The date of registration of the trust was in 2016. Please advise what to do. What are the consequences for not registering?
Deepak sir, should I?
No, you are a faculty. You have a first right to answer.
Okay. I will pass on my right. There is no problem. Okay, my opinion in this, where
It will be
a
taxable
charitable
then.
trust, and even if it is no, the question is, the person agrees that it is liable to be registered under GST. The trust was registered in 2016. GST has come in 2017. It was liable to be registered. What to do? My first answer is register yourself. What are the consequences of non-registration? Consequence number one is that the department can assess you as unregistered, make you register, and collect taxes from you, even if you have not collected taxes from persons, along with interest and charge penalty. Point number two, whatever taxes are collected from you, your recipients are not going to be able to claim the input tax credit because you are unregistered. Correct? So I think these two are big enough reasons to register yourself as soon as possible, because there is a provision for assessment of unregistered persons in GST also. Just because you are not registered does not mean that you can escape assessment. Deepak sir, anything in addition to this?
No. I think perfectly well said. Yes.
Next question is by Mr. Murtaza. He says a few doctors are getting together and forming a clinic. One of them is a plastic surgeon consulting or performing cosmetic surgery, which is taxable under GST. Will GST registration be required because the total turnover will be crossing 20 lakhs? In this case, the other doctor services will be considered exempt, and accordingly, part ITC will be required to be reversed. Is it true? It's question mark.
Yes. The first question that needs to be answered is, if they are coming together and forming a clinic, what is the constitution? Are they going to be, they are coming together in a clinic and providing their own separate services, or they are going to, for, let us assume from the question what we understand is that they are going to form a particular entity, maybe a firm or any AOP, BOI, whatever it may be, and they are going to make a clinic, and that particular entity is going to be providing services. He has rightly stated himself that yes, if one of the person is a plastic surgeon, in that case, his services are not covered by the definition of healthcare services. This clinic, first and foremost, will be considered as a clinical establishment. Okay. Next, healthcare services. The services provided by the other doctors may be covered under healthcare services. However, services of plastic surgeon will not be. Part of the turnover will be taxable under GST, part will be exempt. As such, whatever input tax credit that is directly in relation to the services of plastic surgery, you will not get any ITC. The services which are directly relating to anything else other than plastic surgery, you will get full ITC. Whatever are common inputs and input services, you will have to proportionately reverse ITC under section 17 to read with rule 42.
I think you said inversely, the services you switched, but other than that, yes.
I'm sorry.
Yeah.
The basically the so taxable services you can claim full ITC. Exempt services you cannot claim any ITC. Common inputs proportionate.
Right.
It is 2.5 hours. I have not had water also.
No. Last, I believe we have a last question before we conclude. This is by Mr. Hakim. He says, can a charitable trust, which is a working women's hostel, charge room rent as a percentage of working women's salary which is much below 1,000 rupees per day, can they benefit from the exemption of the CBIC circular, which says lower than 1,000 per day?
Yes, they will benefit not just from the circular. There is a notification which states that if your room rent charges, now your declared tariff. Now, 1 minute. What needs to be discussed here is not charitable act. See, one thing is clear is that this does not fall under the area purview of charitable activities. Now, if you read the notification with regard to accommodation services, it speaks of declared tariff below 1,000 rupees. And if my memory serves me right, there was an amendment to this also. Umang?
I believe it was changed to
you have
value of
written a
supply.
book on hospitality industry.
But so this is hostel, but anyway, it was with respect to catering, if I'm not wrong, and where they have amended everything else to value of supply, and they changed the definition of catering and everything. So there they just said everything
For
was changed.
accommodation, they did not. Accommodation, okay, it still remains declared tariff.
In restaurants and in catering for the limited purpose of definition of specified premises.
Okay.
So this, I believe, you have to look at is what in education wala entry.
No. This will not go under education wala entry.
No,
this
one
will
minute,
go
one
under.
minute. Let me chip in here.
Hello.
Yes,
Hello.
yes, sir.
I have come across one latest advance ruling, and I am just locating which I could locate on the same question that this question raised was whether an activity of providing the hostel on rent to various students and per day it is coming to less than 1,000, whether it is exempt. And the answer given by this ruling is yes, it is exempt.
Yes.
And this ruling, I will just speak out the name and the, it is our Maharashtra own, Godavat Edu Serve LLP. Godavat, GHODAWAT, Godavat Edu Serve LLP, Kolhapur. And the ruling number is GSTARA 72 of 2019-20 dated 27th August 21. It is 27th
Yes,
August 21.
Oh,
Yes,
very,
sir.
very
Yes, sir.
late.
Yes, sir. Yeah, no,
Yeah,
I
yeah.
remember seeing this advance ruling. Now, sir, what I'm trying to discuss here is, by all means, if there is no problem in charging on percentage, so long as it is less than 1,000, it is exempt.
Yes.
However, what I'm trying to see is the wording, because if I remember, they had changed the wording. Earlier, it was declared tariff. Now, if a person is charging as a percentage of their salary, how does the hostel show the declared tariff? That is the practical point I'm coming to.
So we have the querist also on the. Yeah, sir. Hakim, sir, you can, if you have anything further to add, you can.
No, sir. This is a I think all over India trust, and they have their branches many places, and they have a policy in the trust deed that this has to be taken as a percentage of the working woman's salary. So that comes 7,000, 8,000 per month. If we divide it into 30, then it goes below 1,000 rupees. But the question is, there is no fixed tariff.
Okay, let me 1 minute. This question can be answered because I have accessed the notification. I am referring to notification number 12. Okay, even in notification number 11, in which rates of taxes are given, as I had said earlier it used to be declared tariff. It was amended to it now reads value of supply. So the entry is services by a hotel in guest house, club, campsite, by whatever name called, which includes a hostel, for residential or lodging purposes, having value of supply of a unit accommodation below or equal to 1,000 rupees per day exempt. Now, value of supply determined in terms of section 15, where section 15 is transaction value, whatever you are charging to that person, if it is less than 1,000, exempt.
Okay.
Because I remember this was a problem with all these OYO and all these online providers, where they said that our declared tariff may be anything, but we run promotional schemes, what we charge is much lower. So the rates of taxes were going high. So they made this amendment to say that it is value of supply. So whatever you charge. Now, how you calculate what you charge is immaterial.
I see.
Yes, agreed. Yeah.
But
Okay, so
sir,
entry number 14 of notification number 12 of 2007. Central
Okay.
Tax
So
Rate.
reading this,
noted down. Yes, sir. I have noted down.
amendment.
Yeah.
So
Sir,
rightly said, Aditya. Reading this notification and the advance ruling which I have said, I think
Yes.
Hakim sir's question is covered and answered that it is yes exempt.
Yes.
If it is per day 1,000 rupees and less.
Yes.
Yeah.
Sir, if by chance they include even food charges with that amount, with apart from room rent, in food also
Composite.
included.
There are advance rulings to this effect also.
Composite.
And the concept of composite supply will come into picture, where the
Okay.
predominant supply is that of accommodation. And
Okay,
in
sir.
ancillary to that, it is naturally bundled in the course of ordinary business. You are providing food, it will still be part of accommodation service only.
Thank you, sir. Thank you very much.
सबका मिला के 1000 रुपए के नीचे है, तो it will
Yes,
apply.
sir. Thank you very much for the clarity, sir.
Most welcome,
Yes.
sir.
Thank you.
Yes, I believe with this we have covered all questions. I'll request our editor, Dhaval to give a well-deserved vote of thanks.
Before Dhaval gives really a well-deserved vote of thanks, let me from bottom of my heart say that Aditya has really justified the topic, and he is not less than Gautam Bhai at all. So good that you conveners selected both the faculties, and we are really missing Aditya, Seema, Pradeep. Please convey Aditya to him.
Yes,
that
yes.
we even thank him for the preparations what you both have made, and you presented so thanks to him also. So
Yes, sir.
so I am really happy that the way you are contributing, and our conveners are so eager to plan such programs, and they put in their heart, let me tell you. And I think all the participants also will agree that please look for such programs which are really educative. And as rightly said, that for a speaker, there may be a less crowd, but it should be an interesting crowd.
Yes,
So
sir.
the quality matters rather than the numbers. But here today we had almost 85, and maybe slowly some reduction happens.
No, the
But
questions were really thought-provoking. I wish to thank all of the
So whosoever are there
participants
raise
also.
the questions. Perfect. I mean that itself. And I think that only one suggestion before Dhaval gives the vote of thanks about the 12 AA or reference of 1023C and all that. So here, as an office bearers and our president, I think he may not be there, but Umang, you may not just note down. I am suggesting a perfect representation to be made as
Yes.
soon as possible, so that our association's lead will be there, and the representation should be made in such manner. And just you search that where 12 AA is there, should also be the inserted the
12 AB
wordings of
should be
12
covered.
AB, because for past period 12A will be 12 AA will be helpful, and for the future period April 21 onwards 12 AB will be helpful. So immediately let us a small suggestion be made and put to our the commissioner as well as to the GST council, because they are meeting on 17th September. So let the right representation go. So Umang, you can just request all our office bearers to take this note. And thank you Aditya. And
Thank you so
let
much, sir.
the real perfect vote of thanks be given by my brother friend Dhaval Talati. Yeah.
Dhaval bhai, you're muted.
You are muted.
Yes,
Thank
sir.
you, Deepak bhai. It's really I feel honored to give a really well-deserved vote of thanks to my dear Aditya Surte. He has wonderfully tackled the topic, and he has, as rightly said by Deepak bhai, he has given full justice to the topic allotted to him. He has dealt not only with the religious, educational, and the health sector. Simultaneously, he has gone in deep the business definition along with the supply, and he has rightly traveled, and whether what the trusts are required to get themselves registered, first of all, under the GST Act or not, he has wonderfully dealt. And he has not, he has really not, we have not felt the absence of Aditya Seema. Let me tell you, have worked really in jointly very hard, and rightly Aditya has tackled 3 ARs of Maharashtra, very important ARs, one of Karnataka and one of Tamil Nadu as well. And he has really given the justice to the topic he has allotted, and he has, I would once again say, he has not made us feel the absence of Aditya Sima. And I once again thank Aditya to get himself a little burden, of course, but he has must have also enriched more by taking the responsibility of Aditya Sima. I just once again thank Aditya for a wonderful session.
Thank you so much, sir. Thank you very much. Thank you for giving me an opportunity so that I could study the topic in detail. Thank you.
Thank you, Aditya.
With this,
we feel that we are listening to Surte sir.
That is the biggest compliment that I can get any point at any point, and it will. Whenever I get that compliment, I feel that I have accomplished something every single time. Thank you, sir. Thank you very much.
With this, we can
everybody.
Yeah, thank you. We will conclude the session. Our next session, the details will be shared very shortly. Thank you.
Thank you, conveners, everybody present over here. Thank you. Thank you, Dhaval.
Thank you for a wonderful session. And I really also thank CA Gautam Shah as well. Thank you.
Yes. Thanks.
Thank you, everyone. We conclude the session.